tally recovering. Take a listen to what he had to say.
Nobody's travelling. The restrictions mean that Easter will essentially be a write-off. That would probably leach into a slower Q1, the June quarter.
And after some losses, really losses across the board last week, we see some optimism to kick off the week, maybe a little bit of a buy the dip mentality here. FTSE futures are up 2/3%. DAX and CAC futures each up almost 1%. But of course, it's the FTSE that we'll see open first as usual. Let's pull up the global macro movers screen to see a slew of risk assets. The left-hand column here being the equity indexes. It populates as they start trading live, and the FTSE is already out, up 0.2% and climbing. So the FTSE pushing into positive territory as the first trader of the day. The IBEX pops open, up 1% this morning in Madrid. So the Spanish stocks trading higher as well. Now French stocks open up with the CAC 40 up 0.75%. And basically, we're going to see this across European trading. Markets continue to rise. It's not only equities that we're focused on, though, this morning. Anna, is it because the Reddit Wall Street Bets crowd, as well as Zero Hedge and a number of other social media groups, have been focusing in on the silver market this morning? What do we see there?
Yeah, absolutely. We see substantial gains in that price of silver. So we're up by 8%, just over 8% right now, flirting, well, we're almost up to that $30 mark, but we're not quite there yet. We were talking to our colleague, Eddie van der Veld of the Markets Live team in the last hour, and he was cautioning us that there isn't the same big short position in silver as there has been in some of the other targets that we've seen of this retail investor movement. So perhaps the dynamics here are a little bit different. There isn't the same short position, so we might not see the same short and gamma squeezes, but we do see something pushing, maybe just the demand from the retail crowd, pushing the silver price higher. He was cautioning us to keep an eye on, well, he was saying that the market is huge and should be fairly resilient, but to keep an eye on the ETFs around silver, of course, also keeping an eye on the London OTC market and the way it functions. So we're certainly going to be keeping across this story and keeping an eye on the price of silver as it moves. Now, European equity markets then opening to the upside, but capturing the attention of traders this week has been a huge rally in single stocks, thanks in large part to Reddit-inspired speculators. We've been talking about that already this morning. Joining us now then for the latest is Bloomberg's Danny Berger. Danny?
To keep an eye on in terms of, how will these stocks fare, of course, is what Robinhood is doing and other applications in terms of limiting some of these trades. Now, the latest we know from Robinhood is they still do have limits on about 8 different stocks, and these are stocks that are associated with this Reddit-fueled rally. It's not as severe as you can't buy them, but there are certainly restrictions. For example, GameStop users on Robinhood are limited to buying just one single name stock, so you certainly can't pile in as it used to. So here's some of the other names that they've limited as well. Now, we also heard from the CEO of Robinhood talking on Discord, which is an audio app message board with Elon Musk this morning, explaining more what happened in the decision, saying that the depository agency had required another $3 billion in collateral from them. And part of the reason they were able to reinstate trading in these names is they lowered that requirement after Robinhood appealed to them to $700 million. Now, the question, of course, is, why is this just coming out now in terms of him talking to Elon Musk about it and not getting that out there to begin with? But still, as the days go on, as we hear more from this executives, we're learning more details about what exactly went on that caused Robinhood and others to limit trading on these shares.
The latest retail frenzy we're seeing in silver, Anna was just talking about, and it's obviously a much bigger market, so we're not seeing 100% gains here, but it still is pretty amazing to see a 15% increase over 2 days in silver.
One of the things that this really makes me think of, Matt, is many days covering quants, and there are a lot of short-term trend following types of strategies out there, specifically in commodity markets. So you'd have to think that they see a short-term pickup in silver. So it's probably gone beyond retail at this point quicker than it would in GameStop, for example, where you have strategies who specifically look at these commodity futures, and when they rise, they will follow along. Because look, at the end of the day, the shorts on silver, as Eddie Vanderval was talking about, are not as clear as they are in GameStop. Institutional traders, speculators, as you can see here, are net long silver, and they have been for over a year. Also, to put it into context, GameStop has a market cap of about $1.4 billion before this whole Reddit rally, so before the 400% rally of last week, and silver has $48 billion worth of it sitting in vaults in London, so it's a completely different market. At the same time, you do have this idea that Reddit wants to go after it. One of the first posts we saw in Wall Street Bets talking about silver was saying any short squeeze in this market would be epic because banks are manipulating gold and silver to cover real inflation. But I have to say, when we do look at the owners of who it is, you can see institutions are net long. Citadel is also one of the biggest shareholders there are. But if anything, this shows we cannot underestimate the power of the retail traders, be it them specifically or people following that trend that they first ignite.
Yeah, absolutely. In fact, I'm in an IB chat right now with Eddie, and he points out that the futures market in silver is $11 billion a day, which is 200 times that of GameStop. So it's a huge difference, and it just shows then how amazing it is to see this kind of move. Danny, thanks so much for that. Danny talking to us about the big retail moves today. And so the comparison is amazing, isn't it? I mean, the fact that the silver market is so big just shows you it's shocking that these groups, and it's not just Reddit, I've been seeing it on Zero Hedge as well, can move silver by so much.
Yes, it is fascinating. And now moving silver stocks as well, because, of course, no matter the reason for the push higher in silver prices, that gets factored in to other assets that rely on it. And now we're seeing stocks like Fresnillo trading higher, up by 14% or so in this morning's trading session as a result of this pop higher. Let's talk about the broader context here. Janet Mui, Bruin Dolphin Investment Director, is with us. Janet, good morning to you. Really interested to get your thoughts on this phenomenon. I was reading various pieces of analysis over the weekend talking about whether we need to worry about contagion from one retail stock into a broader market phenomenon. Some people say no, keep this in context. This is only small. I mean, Barclays, Manish Deshpande giving that kind of guidance. Others saying, and this is from our Markets Live blog, Mark Cudmore, saying deleveraging spirals are not linear, so you certainly need to keep an eye on where they take us. I mean, how nervous are you about what we're seeing at the moment, Janet?
Hi, good morning, Anna. Thanks for having me. I think, well, this is a new phenomenon, so it is still too early to say. I would say right now we're not too nervous or concerned about the situation, because what we observed is that these kind of volatility and frenzy buying is concentrated in a small segment of the market, like really small. So we don't think it will spread to the other areas yet. But having said that, what we saw is that because of these small pockets of volatility and concerns on the liquidity of some of these brokers and the concern on leverage and the whole financial ecosystem, we think that the markets probably in the near term will continue to be quite worried and concerned about it. Again, it's a new phenomenon. It's too early to tell, but we think wider implications are not likely at this point. And if there are more, spreading through of this, I think the regulators will start to think harder about the issue.
The one thing I wonder about, though, Janet, is, valuations have been high for a while. This market continues to march higher despite extended lockdowns hitting the economy harder, despite the vaccine rollout not going as quickly as maybe we thought. And we were already questioning these valuations, and now it's like the shoe shine boy is telling you it's time to buy stocks, right? The average guy who would have talked to you about the Giants game is now saying, hey, did you pick up, shares in cost last week? Isn't that supposed to be, that's the old adage, right? That's the that's the cliche concern about a market that's marched too high.
Yes, thanks, Matt, for the question. Well, I think there is some truth to that. I think historically, when you have this kind of extreme bullish sentiment from retail investors, it usually precedes some more of a market correction at some point. However, what we think is that right now, the market retail frenzy is really concentrated in a small selection of stocks. Of course, that there's this potential to spread to the other areas like silver, as we saw recently. We think that in terms of the broader market, is still not a threat. And of course, valuations are elevated in certain areas of the market, which are prone to some sort of correction, in our opinion. Actually, at the start of the year, we have been expecting some sort of pullback, simply because markets have rallied so much since the beginning of November when we have the vaccine announcement. Markets doesn't go up in a straight line, so we have been expecting some sort of pullback. But I think in the next couple of months ahead, markets will be continually focused on the fundamentals, which are the recovery of the economy, the reopening of the economy, and the continuation of the vaccine rollout. So we think these will be more of a focus after this temporary phenomenon is gone.
Yeah, just sitting here watching silver prices, 29.69, Janet, heading ever closer to that 30 mark. You say focus on the fundamentals, and many investors, I'm sure, would give us that same message, Janet. But when we start to see commodity prices pushed around, and these aren't just used as protection for investors. Some of them have uses in industrial settings, of course, and this could then have an impact on the real economy. I mean, how do we contextualize the rise that we're seeing in silver prices and think about what it could mean if we see this kind of retail wave of money heading into other commodities?
Yeah, that's a very good question. I think we have yet to observe what's going to happen, because it's only the first few days that the silver market is being influenced as well. So, of course, we have seen a bit of sharp gains in silver, but I think it will only matter to the physical market or the wider market if it's a more prolonged theme. So if it's only volatility that is happening, then it probably wouldn't pose too much of a systemic pressure or volatility for the whole system. So we just have to see what happens in the next couple of weeks. But I think, we just have to keep an eye on the development at this moment. And I think silver historically, it is more volatile than gold. It is a higher beta play generally. So I think we just have to observe how it goes.
All right, Janet, thanks so much for joining this morning on Bloomberg Television. Janet Mui is a Bruin Dolphin investment director. She is going to continue the conversation with Anna and myself on Bloomberg Radio at 9 a.m. UK time. And if you're in the city of London, you can tune into that on London DAB digital radio. Now, Swedbank promises to raise dividend payments. This as the Swedish lender decides to establish a new Baltic unit. Up next, we're going to speak to the CEO, Jens Henriksson. This is Bloomberg.
Welcome back to the European Market Open. 15 minutes into a European trading session that is showing moves to the upside. So stocks here in Europe move higher. We are keeping a close eye on what's going on with silver. Silver futures at $30, as you can see, up by 12% as the retail investor group seems to have turned their attention from single name stocks to this particular commodity. An interesting ongoing conversation with the Markets Live team about that one. Let's get to an earnings conversation right now, though. Swedbank says it wants to raise dividend payments. Sweden's biggest mortgage lender is reporting fourth quarter results that beat expectations. Its net income beat the Bloomberg estimate by over 10%. Swedbank is also announcing the establishment of a new Baltic unit. Let's talk now to Jens Henriksson, Swedbank President and CEO, who joins us now. Jens, good morning to you. So we've been through some of the highlights there of your earnings story and some of the news that you've announced this morning. But we do see that the stock is down by 4.5%. Do you think there's anything investors are missing here? Any message you'd like to give them as to the latest news flow?
Well, good morning, Anna. I don't never comment on the sort of stock price. I was the CEO of the Swedish Stock Exchange, and I learned that brutally. Let me first say that we've delivered a stable result in very difficult times. And if you look on the sort of year end, I would say that considering both having a fine and the pandemic, we've delivered a very stable result in a turbulent year.
Let me ask you about the housing market. Clearly, a business that you're very exposed to. It seems to have, this is the Swedish housing market. It seems so far to have weathered the storm of coronavirus. Do you expect it to face any difficulties once substantial government support is withdrawn?
Well, when our economists look upon it, they see a continued increase, although at a bit lower level.
Right, but are you concerned? Are you preparing for a possible increase in foreclosures? Is that something that it doesn't sound as if you expect that to happen then?
No, we don't see that. If you look on the bankruptcies and everything, it looks pretty good. And I think that when the vaccine is coming, the IMF came out the other day and talked about the highest world growth since, I think, was it 1973. So if everything goes according to plan, I think we'll see a good year. But we still need to be vigilant and follow the developments.
I wonder if you can update us on the money laundering case right now, Jens, and tell us if any progress is being made towards allowing banks to share information on suspicious transactions or on customers to prevent money laundering. How have things improved there?
Well, we worked very hard to close our historical deficiencies and our historical shortcomings in Swedbank, and that has produced quite a lot of good results. We see that a number of people working in Swedbank only related to sort of fighting financial crime is now up to almost every 10th person in the bank. We still are investigated by the US authorities. I have no clue how long time that will take, and I have no clue what the result will be. We answer questions and are there if they want more information.
Would you like to see transaction monitoring become integrated into the P27 project, the cross-border, cross-currency instant payments clearing system that's being developed?
And I think the key point is that we at Swedbank needs to be good on preventing money laundering, and that means that we need to sort of know our customers, we need to understand our risk, and we need to have a very good transaction monitoring ourselves.
Jens, it seems that asset managers at Swedbank, like many Nordic banks, have been arguably at the forefront of pushing for greener investments. I wonder how you apply those green criteria to your loan book. What kind of activity are you undertaking to make sure that your loan book is also living up to high environmental expectations?
Well, we're very proud of the work Robur is doing, which is our asset foundation management company, and I think they're actually one of the top players in the world. We have been very good on sustainability in the bank. What has happened now is we've done a strategic review where we decided to take further steps, and as a consequence of that, we will now stop giving out loans to sort of unconventional fuel production, and we will also stop new lending to sort of oil prospects in sort of new oil fields, provided that they do not follow, the customers do not follow the Paris Agreement. So we're taking further steps, and sustainability has been and is at the core of Swedbank since 200 years, and we will continue that journey.
You know, there's talk about, again, about negative rates in Sweden after inflation moved further away from the Riksbank's target. Should it happen, will the bank pass on the cost and begin assessing charges for retail deposits? I mean, is that a way that you can deal with it?
Well, first, I'm not going to sort of give any advice to the central bank. I think they've handled the pandemic in a very good way. Second, you have to remember that our origin is sort of the savings and loans movement, and that was for ordinary people to be able to save money on a bank, which was impossible to do 200 years ago. So for us, sort of proposing to have fees on normal private individuals, I think it's very far from that.
Thanks very much, Jens. Thanks for joining us. Jens Henriksson, the Swedbank President and CEO. Thanks for taking the time to talk to us here at Bloomberg TV. Let's have a look at where we are on these markets. European equity markets push higher. US futures also point to the upside, as do silver futures. We've got silver prices rising considerably through the Asian session, and silver futures, as you can see on your screen, 29.94. This as a result of increased attention from the retail investor crowd, at least those on the Reddit and other social media chat spaces. So we certainly keep an eye on that phenomenon. Coming up on the program, we'll dig into some of the stocks that are on the move. Some of those have something to do with silver. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open, 25 minutes into the session right now. And we're looking at gains. The Stoxx Europe 600, the broader European equity index, is up 0.9%. Basic resources are leading the charge. Should be no surprise. We've been talking about the underlying commodity that's driving that. Basic resources group is up, and the underlying commodity itself is silver. You can see a gain of 11% in silver, which is pretty amazing considering the size of the market. But, you know, as we were talking about with Eddie earlier, there have been conspiracy theories about silver, especially about allegations that some have been pushing the silver price down in order to hide the true growth in inflation, and now you can see that looks like a retail crowd is betting against that. Let's take a look at the other movers that we have this morning. For that, we go back to London to Danny Berger. Danny?
Matt, it would only make sense then that the biggest moves in the Stoxx 600 are all silver companies. The top two are silver producers. So Fresnillo is one of them, up nearly 18.5%. Polymetal is another one that's up. This is going to be its biggest move since March of 2020. So it's going on not just an underlying silver price, but this means people jumping in, buying some of these companies as well. Maybe it's not retail traders buying Fresnillo, but at least the rally in that silver price is encouraging people to buy some of the cash market in terms of these companies. JD Sports also rising thanks to a purchase, and Unibail under pressure with more lockdown restrictions.
Thanks very much, Danny. Coming up on the program, a step forward, European Commission President Ursula von der Leyen and the latest on AstraZeneca. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into Monday's trading session here for European equity markets. And this is what we have for you. Stocks Europe in Europe up by 0.8%. The FTSE 100 up by 0.9. Broad-based rallies then across these European equity markets. If we break this down by sector, it's actually perhaps surprising that we don't see the London market performing a little better because of the strength in mining stocks. But then energy is the other side of that trade. So energy actually underperforming. So basic resources up by 2.4%. You can see that represented. Danny was just taking us through some of the shares in silver mining companies and how well they are doing on the back of these at least retail investor inspired bets on silver. Maybe that's as much as we can say as to where the source of this rally has come from, but we certainly have a very strong silver price that is being reflected in strength in silver mining companies, pushing that sector higher. Energy, as I say, to the downside. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The UK's supply of vaccines is secure and the country's rollout is on track. That's according to International Trade Secretary Liz Truss. The EU's new rules require vaccine producers to get authorization before sending shots outside the bloc. But Truss says the government has had assurances that the UK's access will not be disrupted. Myanmar is facing a new political crisis with the military seizing power. They've declared a state of emergency, disputing the election result and detaining the nation's de facto leader, Aung San Suu Kyi. According to Reuters, Suu Kyi is calling for protests, saying the army is pushing the nation back into a dictatorship. President Joe Biden is meeting with a group of Republican senators to discuss their alternative proposal for an economic relief package. The lawmakers are suggesting a plan worth $600 billion in response to Biden's $1.9 trillion. The Republicans have already rejected the bigger plan, but say they're willing to discuss the path forward. Anti-Putin protests are continuing across Russia for a second straight week. More than 4,000 people have now been arrested, including the wife of jailed opposition leader Alexei Navalny. It's difficult to accurately track turnout, but according to monitors, the number of people detained topped last weekend. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura right there with your first word news out of London. Now, AstraZeneca is planning to deliver an extra 9 million doses of its vaccine to the EU this quarter. That's as the bloc tries to get its chaotic vaccination drive back on track. It brings the total to 40 million, only about half of what the EU had expected to receive from the drug maker by March. Joining us now is Pascal Canfin, European Parliament Environment and Public Health Committee Chair. Pascal, thanks so much for joining us. I wonder what you think can be done to put us on the right track here.
Well, actually, we faced two problems. The first one was, is there a sort of unfair treatment, unfair distribution between the UK and the EU from AstraZeneca, saying that, okay, we are going to ship and deliver all the vaccines to the UK, but we are going to restrain the doses delivered to the EU only. So that's the first thing, and that's why it was so sensitive within the EU, because we had the feeling that there was a sort of double standard. And then that's why it was in detail discussed with the UK, and we managed to have a compromise. Then there is a second problem. And the second problem is different. The second problem is, are we facing a lack of capacity to produce whatever the final destination is? Is there a problem of production capacity in the EU market from the AstraZeneca plants? And then that's why we need to work with them to increase the capacity production, because of course we need to deliver more and at speed.
I want to bring in Maria Tadeo to this conversation. She covers everything Europe for us from Brussels. And Maria, why don't you give us also your take, and feel free to ask Pascal anything about what the mood is in Brussels right now.
Yes, and look, Matt, as you were mentioning, this is 40 million vaccines that AstraZeneca is now promising to put on the table, but it's worth highlighting here that this is still a big cut. This is almost 50% lower from the original target that the European Union was hoping, 80 million vaccines in Q1. And Pascal, that's almost my question to you. When you look at 40 million vaccines, would you say that's good enough for Europe, or this was just the only take that you could get to avoid a bigger confrontation from going even more public?
Well, there are, again, two things. The first thing is that we have ordered more doses to Pfizer, okay? So if ever we are short of AstraZeneca doses, maybe we can compensate with more Pfizer doses, and that's a question of timing. The problem is that I can't answer exactly this question because the timing delivery, I would say month per month, is not public. So I don't know if buying more Pfizer doses will compensate less Astra doses. Then there is a second question regarding AstraZeneca, which is, are they facing a lack of capacity problem, and how can we help for them to produce more in line with their commitments in the contracts? So there are two issues still on the table to be solved and to be clarified, but of course what happened this weekend and the decision to have more doses to be delivered to the EU is a good first step in the right direction.
Okay, and when you say this is going to be a step in the right direction, is that because you believe AstraZeneca will step up in time? And again, you know, for many Europeans, there has been a lot of whiplash. You know, a week ago, this was a bad deal. Everyone was angry at AstraZeneca, and then on Monday morning, it's almost a good compromise. You know, why is there this whiplash in the same week?
No, you know, actually the story dates back to a couple of weeks when we all knew the AstraZeneca vaccine would be authorized. And there were conversations between the European Commission and AstraZeneca. And the European Commission asked AstraZeneca to start storing the vaccines in order to deliver and to send the vaccines doses as soon as possible once the vaccines will be authorized. And AstraZeneca, to my information, said, well, no, we are not going to store your vaccine. We are going to ship the vaccines we have, and we are going to start storing once the vaccines will be authorized in the EU. So it means that there will be a 2 weeks, 3 weeks, 4 weeks delay. And that was the starting point of the problems we faced with AstraZeneca and the feeling we had as Europeans that they didn't treat us fairly, compared to others like the UK, for instance. That's the starting point of the problem we faced with them.
Right, and that's also key here, because what is clear to me whenever I speak to any European official here in Brussels, but also in the big European capitals, is that the EU does feel that it was a damage party in this whole negotiation, and that if anyone has been treated unfairly is the European Union. So then I wonder, when you see the whiplash from everyone else accusing the EU of being nationalistic on the vaccines, would you say that's a failure in your communications?
That's so the fact that it's a very good thing, and we have been supportive of that from the very beginning, that we have a single European framework. I mean, like in the US, there is a single US framework. There is now a Texan contract and a Californian contract and a Washington, D.C. contract. Okay, so that's exactly the same in the EU. We are better off. We are better off with one single negotiating framework instead of having 27 contracts competing with each other. And the fact that the only one we are more or less competing with in terms of delivery is the UK, because of the Brexit. And there was a clash, okay, 27 countries on one side, one country on the other, and there was one clash. Imagine if we would have had 27 contracts, then it would be clash every day between France and Spain, Germany and Poland, Italy and so on, because we would compete each other to access this vaccine. So it's good that we have a single European framework. And then, of course, we have to demonstrate that we make the most to deliver at speed. And that's why we face these problems, specific problems with AstraZeneca. I don't see it as a problem or a failure. The word was used. It's not a failure of the European process. On the contrary, what would you say today if the Commission would have said nothing to AstraZeneca, knowing that there was a sort of unfair treatment between the UK and the EU? The Commission was completely in its role to do what it did.
Sense has to wonder why it took Europe so long. I mean, Brexit's not the only difference between the EU and the UK. You weren't just a week late asking AstraZeneca, or 2 weeks or 3 weeks, but 3 months later. I mean, why did it take so long to do what you should have done so long before, when everyone knew this was coming? That looks like a failure of the European process.
So, you know, regarding the emergency authorization used by the UK government, I mean, it was under the framework of the European law. All the European countries could have done that if they had wished to, but none of them did. Why? I mean, that's a good question.
They should have all done it on time.
Why? Because
they should have all done it on time rather than waiting so long and causing these problems.
They could have. They could have.
Why didn't they?
No. Why? For 2 reasons. The first reason, exactly, so let me answer you. The first answer is because we wanted to follow and to wait for the formal authorization from the European medicine agencies. Because we have rules in place and we wanted to have a safe authorization from the EMA. And because we do not want neither to have full liability for the government and zero liability for the pharmaceutical companies. And second, you know, in the UK vaccine strategy, they are fully on the first dose. They use the first dose of Pfizer and AstraZeneca, and they do not, and then they change the protocol. Against the will of Pfizer, they changed the protocol to wait for the second doses after 12 weeks, I think, which is not what we decided neither, because we decided to comply and to stick to the initial protocol established by the pharmaceutical companies themselves. So it means there are 2 differences there that explains very easily the fact that we are behind the UK, because we made, not because we failed, but just because we made other 2 decisions on purpose, fully aware of the consequences, but we did differently in the EU. That's it.
All right. Thank you so much for the explanation, Pascal, and thank you so much for your time this morning. Pascal Canfin, European Parliament Environment and Public Health Committee Chair. Maria Tadeo, we thank you as well, as usual, for joining us for this episode of the Brussels edition. Hope to hear more from you on radio today. Coming up, the retail frenzy marches on, this time hitting silver ETFs. Is Wall Street or Main Street profiting off either of these moves, or both? We'll discuss next. This is Bloomberg.
Welcome back to the European market. Open 46 minutes into a trading session that shows some resilience this morning, up by 0.9%. Basic resources, the best performing sector, up by 2.3%. Some of the silver miners and other broader precious metals miners doing well this morning. Silver futures flying as a result of renewed attention around the retail investor story. Now, AstraZeneca is planning to deliver an extra 9 million doses to the EU this quarter, taking the total to 40 million. We've just been discussing that from a political perspective. That is still only about half of what the bloc had expected to receive by March. AstraZeneca has committed to use its best reasonable efforts to build capacity to manufacture 300 million doses. Joining us now is Christoph Ronser, expert in healthcare and pharmaceutical law and partner at the law firm Altius. Christoph, really good to have you with us and to help us understand a little more about what we've learned in the last days around the contractual obligations, I suppose, here. Having had a few days to look at the contract that was published, I'm sure that neither side would have allowed it to be published if they didn't think it was going to help them. But have you drawn any conclusions as to who had the legal upper hand, even if this doesn't end up going to the courts?
Yes, good morning to you. Well, I had a look at the redacted version of the contract, which was disclosed by the Commission. And as you mentioned, it provides for a best reasonable efforts obligation for AstraZeneca to manufacture and supply. A best efforts obligation is what it says it is. You have to use your best efforts to achieve the promised result. It is what we would call an obligation of means. So you must use whatever means are reasonable at your disposal in order to deliver. It's not an obligation of results. So you will only be breaching the contract if you do not use your best efforts, but not necessarily if you do not reach the result which was agreed.
And so, Christoph, where does that lead us? I mean, we haven't seen the UK's contract with AstraZeneca, of course, so that part is maybe a little less clear. But what about if you have best effort obligations to a number of parties at the same time? From a legal perspective, how should we interpret that?
Well, there is a clause in the contract, and I think it becomes relevant within that context, that AstraZeneca, providing that AstraZeneca guarantees to the Commission that its obligation, its best reasonable efforts obligation to manufacture and supply does not conflict in any material respect any other obligations it would have towards third parties, including the UK authorities. So the question would arise within that context whether indeed giving priority to UK obligations would run counter that guarantee, which is a firm guarantee and which definitely applies.
And what is the precedent for this then, Christoph, in terms of contracts for supply of medical materials? Giving priority to the people who asked first, giving priority to a contract that was signed first. Is there precedent for that?
Well, this is a very particular case, as you will imagine. This is also a very particular contract because the supply contract was actually entered into when the vaccine in question was not even subject to a marketing authorization. And it provides for a very particular mechanism of advanced funding. So there is no real precedent to look at in this respect. You would have to apply the general contract rules under Belgian law applying to this contract. And you would try to find out indeed how this obligation sits with competing obligations. As it stands, if you read the contract, it appears that indeed the EU should get the priority.
Okay, that's interesting. I mean, this may not get tested in a court of law, but it is interesting to get your perspective on it then. Christoph, thank you very much. Christoph Ronser, partner at Altius. Coming up on the program, silver spikes as the precious metal takes center stage in the retail investor frenzy. We'll discuss the latest with our Markets Live editor, Eddie van der Walt, next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session. We're seeing equity indexes up after the dips of last week. I want to get back to the markets and specifically silver with Eddie van der Walt, our Markets Live editor. I'm kind of looking for the origin of this big silver push, Eddie. I see a lot of talk about silver on zero hedge, as usual. And I also, see people like Zach Morris here and there on Twitter talking about it. But Wall Street Bets seems very much against silver because they want people to continue to hold GameStop with diamond hands.
And I think that's the better play for them, isn't it? Because, I mean, these are markets that they have shown that they can push around. To suddenly pivot across to a commodity market, it's an unproven game for them. So I think that's probably that's the way that I think about that. I also think that the silver market is prone to conspiracy theorists, I have to say. And I wonder whether there isn't some level at which the conspiracy theorists just are using this opportunity to jump on this market and say, here's something you should be looking at. But all of that said, there were more than 10,000 upvotes on the original post that said let's push silver higher on Reddit. So I think there is some buy-in there. There are disparate groups.
Okay.
So.
Okay, so there was some initial retail enthusiasm from somewhere, at least, Eddie. In terms of where this leads us, because part of the reason we got so interested in the GameStop story last week was because of the knock-on effects, because of the short squeeze, because it meant that hedge funds had to sell some of their long positions, and so it had broader market read across. Do we see any of that with this silver push higher this morning?
We're not seeing any of that yet. I think we're seeing the first level effect of people buying it on the basis of the new interest. There are two things I'd like to highlight. Number one, the silver market is oversupplied. If they were to take on a tight market, a tight commodities market like palladium, that would be an entirely different ballgame. But this is an oversupplied market. It has been for years. The second thing with the silver market is it's larger than some of the other commodities. So I don't know. I think it's going to be difficult to get that same domino effect that we had in the single stocks.
All right, Eddie, thanks very much. Eddie Vanderveld there from our Markets Live blog. You can get his work and the work of his colleagues by typing MLIV Go on your Bloomberg terminal. Up next, it's surveillance on Bloomberg TV. Anna and I are headed to radio. You can tune in on London DAB Digital. This is Bloomberg.
Silver spikes, retail investors swarm into their biggest target yet, sending the precious metal above $30 an ounce. AstraZeneca ups vaccine deliveries to the EU as the bloc tries to give its rollout a boost. Angela Merkel holds crisis talks with pharma executives. And President Biden will meet with Republican senators proposing a $600 billion stimulus plan as the debate over the size of the relief package continues. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, this is what the markets are looking at, and a lot of the focus, of course, is on silver. Now, we've been speaking with a number, of course, of participants, on and off, retail investors, and it's very clear that the focus is on silver, but I'm going to be very cautious with links to top stocks like GameStop, because the scope for a short squeeze, frankly, is far less obvious than with some of these other stocks. If you look at money managers' position, they had a net long position on the metal since mid-2019. A lot of the other focus is, of course, on inflation. We heard the ECB being more worried about inflation being too low than inflation being too high. You can see European stocks up a touch and Euro-dollar 120.85. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. AstraZeneca is planning to deliver an extra 9 million doses to the EU this quarter. That's as the bloc tries to get its chaotic vaccination drive on track. It brings the total to 40 million doses, only about half of what the EU had expected from Astra by March. Europe has come under fire for its slow rollout and says it will start restricting the export of vaccines if drug makers fail to meet delivery targets. Myanmar is facing a new political crisis with the military seizing power. They've declared a state of emergency, disputing the election result and detaining the nation's de facto leader, Aung San Suu Kyi. According to Reuters, Suu Kyi is calling for protests, saying the army is pushing the nation back into a dictatorship. And anti-Putin protests are continuing across Russia for a second straight week. More than 4,000 people have been arrested, including the wife of jailed opposition leader Alexei Navalny. It is difficult to accurately track turnout, but according to monitors, the number of people detained topped last weekend. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, silver taking center stage in the retail investor frenzy sweeping through the markets. Joining us now is Eddie van der Walt. He's from our Markets Live team. So, Eddie, first of all, is it really the Reddit crowd? If you look at how different this is to GameStop, I mean, it's much less obvious because, for example, money managers had a net long position on this since mid-2019. I don't know if we have Eddie. I'm not sure we can hear Eddie. I think we can hear Eddie. I can't hear Eddie. All right, let's go back to actually what we're seeing in the markets overall, and we'll look at silver futures a little bit more. Again, I guess the concern is that there's a lot of media reporting that this is linked to Reddit, which in some parts are, but again, the parallels are a little bit less obvious than they used to be. Joining us also this morning to talk about the story is Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Patrick, great to have you this morning. Can we really make parallels between silver and GameStop?
You can make parallels because it's being discussed actively on Reddit, but it's not the same dynamics that's been so successful with GameStop about a very limited free float and a very larger than 100% short position offsetting that. So it's the silver market's much more liquid. On the futures market, speculators are net long silver, not net short. On the ETFs, there is a short position, but that's dwarfed by what's happening on the basically on the futures side of things, where it is net long. And supply-demand fundamentals, actually, there's more silver being produced than being demanded for this year. So it's not a particularly tight market. Parallels that there's a bit of a media buzz around it, but the dynamics are not the same.
So the dynamics are not the same, meaning that, Patrick, if you look at some of the day traders, they would back down, or it's just much more difficult? You know, what exactly are we seeing? Who's buying it right now?
Well, so the day traders, there's nothing to force them to back down. They can buy it and they can hold it. They can push prices up. But it just can't be the exponential growth that we saw with GameStop, because they're not going to move the dial to the same extent. With GameStop, as they push prices up, there were forced buyers. Basically, hedge funds that had large short positions were almost forced sellers because their VAR limits went up, their gross exposure went up. They had a larger position than they expected in GameStop. So as it went up 50%, then they had to close some shorts, which pushed more buying pressure on. And on the option side of things, a lot of the retail investors were buying call options. And then there was the gamma effect that the hedgers of the underwriters of those options had to buy the stock as well. So because it was less liquid and an extreme short position, the Reddit crowd was able to massively influence the price. On silver, any incremental demand pushes price up, but it's not the same effect because you're not going to provoke a wave of forced buying of silver because there's not this supply-demand imbalance where there's a massive short position in silver.
Patrick, let's also get Eddie van der Walt from our Markets Live team into the conversation. Eddie, how can we be so sure that all of this is being pushed on Reddit? I know we have people monitoring Reddit, and it says, if you look at the number of posts on Reddit or the number of talks, it's nothing like it was with GameStop.
Yeah, I mean, look, first of all, I just want to say Patrick absolutely nailed it. That's all the key talking points this morning. I think one of the reasons that I think that the Reddit crowd definitely has had an impact is that over the weekend, less liquid and more retail-focused trading venues like the bullion vaults, which sells you gold stored in a vault, and coin market and so on, has definitely seen in demand. There was talk about the silver coins selling for $43 a coin, and some coin shops completely run out. So I think the retail, there are some in the retail crowd that got really excited about this and was active over the weekend. Also, even talk about people selling gold in order to buy silver over the weekend. But I completely agree. The second order impact just isn't there. It's much harder to squeeze the silver market, particularly for all of those reasons, but also just because the silver market is oversupplied. So even a physical squeeze, where the ETFs are struggling to get hold of metal, it's not easy to enact in the silver market at all.
Patrick, how do you see this playing out? I know we have a number of Wall Street players also looking at algorithms, or putting in place algorithms to watch some of the Reddit chatter. Could something like GameStop actually happen again?
I think it's not going away, actually. I think the regulators won't really force these kind of things to be shut down. I don't think they'll want to be viewed as being heavy-handed against retail investors. So I do think chat rooms, it's sort of symptomatic of everything that's happening in the world. You've got social media, you've got excess liquidity from central banks, you've got fiscal stimulus, and those checks went into basically day trading accounts, it looks like, as well. And you've got a deep unrest and a frustration among a big subset of the population about the K-shaped recovery, about the haves getting richer and the have-nots not participating. And I think all of that came together with GameStop. I don't think there's a stock as extreme as GameStop, but I do think this is something that's going to continue. I don't think it's going to have the same impact with GameStop because the shorts have learned their lesson. If you're in a crowded short, that's a riskier position than it was. It's always risky to be in a crowded short, but I think it's very clear, and you've seen that with degrossing of positions from hedge funds. First thing you're looking at when you're shorting a stock now is the net short position.
I mean, we have different rules in Europe compared to the US. Could something like that happen in Europe?
Of course it could, and it has to some extent, I suppose, with Nokia being a heavily shorted stock. It's very liquid on the ADR. It's also a little harder to find out short positions in Europe, where it's very public information in the United States. There's full disclosure on short positions. It's a little less transparent in Europe, but the same phenomenon can happen. The other big difference is culturally, there's a lot more day trading in America. For whatever the reason, European people are more ETF, passive, buying the market and holding. Day trading's a cultural phenomenon almost in the United States at this point.
All right, thank you both. Patrick Armstrong there from Plurimi Wealth and our Eddie van der Walt from our Markets Live team. Now, we're just getting some breaking news. Bayer has now agreed to produce the COVID-19 vaccines for CureVac. We'll see whether CureVac actually gets approval. We'll look a little bit deeper. Of course, what the Pfizer-BioNTech and AstraZeneca concerns with the EU shows us is once you have the formula, it's very difficult to really amp up production so that you touch enough people quickly. And so you see a number of the big drug makers not involved in the development of the vaccine now says, look, I can make it, or I can make it for you. I can help with the production of it to get things going quicker. Now, coming up, more from our interview with the Ryanair Chief Executive, Michael O'Leary. We'll talk earnings and we'll, of course, talk about the future of air travel. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
I think we're looking to something between 50 to 70% of normal traffic in that key July, August, September quarter. Now, it could be a little bit faster than that, it could be slower. It depends on the speed of the vaccine rollout to the end of March and then to the end of June. And then it requires the politicians, once you have all the high-risk groups vaccinated, stop locking people up. Let's get back to work. Let's get back to some degree of normalcy.
Well, that was the Ryanair Chief Executive Michael O'Leary speaking to us earlier this morning, of course, on some of the things that he was going to say. He was talking about when he expects travel to come back to normal levels. Now, still with us, Patrick Armstrong from Plurimi Wealth. Patrick, when you look at, some of the unloved stocks, because the pandemic, of course, has crushed a lot of the travel stocks, it's crushed a lot of the airline companies. When do we go back to, do we ever go back to something that looked a bit more like 2019 in terms of travel?
If the vaccine of the efficacy that we're all hoping for, I don't see why we don't get back towards that anyway. I don't think we'll get there this year, but I do think incrementally we get back to there. I don't think anything will change if the vaccines work as we hope and expect. So I do think travel comes back. It'll probably be a bit slow with countries still advising travel, even when it's allowed, but you probably shouldn't do it for a while. But I don't think it's an industry that's dead by any means.
Is there anything that you want to be involved in right now because you see valuations cheap? Do you own some of the travel and leisure stocks?
We're still away from them. We don't have one single travel or leisure stock. They're cheap, but I do think the outlook is still cloudy for a number of months ahead of them. I don't think there's a catalyst right now, the way in November everything rallied once Pfizer announced its vaccine results. I think that jump has already been priced in, and we're probably in for a couple of quarters where I don't think there's a tremendous amount of upside. I don't know what the trigger will be to trigger that rebound, but I think the time to be looking at is late spring, early summer, rather than right now.
Patrick, what are you keen on right now? If you look at valuations, and yesterday I think GameStop kind of took over all the chatter about Facebook and also Apple news, but are these looking too expensive right now?
Apple was an interesting one. It had a blowout quarter, just incredible growth on the revenue, incredible growth on the earnings, and the stock fell a few percent after it released the earnings, which is indicative of a very fully priced stock. When a company beats expectations, but it still doesn't move up, it does show, I suppose, investor positioning was already very much on that side of the beat. For me, what I'm looking for is the Apple earnings. I own Apple, but I think the other 5G beneficiaries that are not pure plays like Apple and Samsung on the handsets, but Ericsson had very good earnings and the stock really jumped. I think 5G infrastructure, 5G beneficiaries, those companies are going to have great earnings and have a very strong tailwind in front of them in 2021. So companies like Ericsson, we talked about, video game companies like Activision, there'll be more online usage, things like that. So more ancillary beneficiaries of 5G as well as the handset providers.
Is there anything that you want to see, Patrick, for example, the components that makes, some of the things that go into the vaccine? I don't know whether you look at this EU-UK spat or EU-AstraZeneca spat as a game changer.
I don't know if it will be a game changer. It's very topical. It's in the press every day. It's emotive, depending which side you're on. But in terms of fundamentals for the companies, I'm not sure that it's going to matter too much. AstraZeneca is very confident in their legal opinion of how things were written. We are playing some of the distribution companies. McKesson is a company we own, which doesn't make the vaccines, but it's the government-appointed distributor of the Moderna vaccine in the United States. That's a company that's trading at 12 times earnings, and I think there's going to be a real emphasis on getting that vaccine out there, and rightfully so.
Patrick, where do you see the next fault? I know we're talking about a cash crunch in China. Where do you see the next fault lines for the markets after the week that we had last week?
It's interesting. Yeah, China reducing liquidity really sent the market into a small tailspin. You really saw the VIX spike up with GameStop. And I think the deleveraging that's happening on GameStop is something that's driving markets right now. That if you look at all the stocks that are hedge funds are net long of, they had a terrible week. And all the stocks the hedge funds were net short of had a very strong week. So I still think that has to play out, because I think those hedge funds have been getting redemptions, and that's just going to exacerbate what happened last week, that the redemptions and the degrossing are going to lead to those trends continuing. Interest rates for me and real yields are the one thing I'm watching before I'm going to change our positioning. So we're moderately bullish. We think the risk assets will move higher this year based on liquidity and growth in the second half. If we get to a point where the 10-year yield approaches anything like what inflation swaps are at. You've got a 10-year yield a little over 1%, and 10-year inflation swaps are at 2.3%. That's a very negative real yield. If that starts to move together, I would become very bearish on the market. So that's a big risk for me.
Patrick, we seem to have a concerted effort from the European Central Bank to at least warn the markets that an interest rate cut could be coming. How dangerous is that if it doesn't come?
I'm not sure. The ECB, it's an interesting dynamic that the rate cut will be good news for liquidity. It'll be good news for the overall market, bad news for the banking system. Negative interest rates are having less and less impact than they did. The first move from 0 to negative was a real boost to liquidity. As you incrementally get more negative, I don't know that it changes anyone's opinion that much at this point. So if it doesn't come, I don't think anyone's priced it in as a certainty by any means. I don't think that's a big risk, actually, for markets.
Patrick, do you see, I mean, going back to, what's going on with silver, could this ever happen to WTI? Could it ever happen to oil, or is it just a different market?
It's interesting, isn't it? We saw it last April when oil prices went negative on the other side of things, basically, that the prices just went to the extreme, to things that no one even thought possible on the other side of things. I think there are commodities where things can get very tight and things could spike up. So about a year ago today, palladium prices really skyrocketed based on very tight fundamentals. And we do have basically more palladium being demanded than being produced. And South Africa and Russia account for 70% of all palladium production. And there's troubles with infrastructure. There's geopolitical issues there. So if you combined a squeeze on those kind of metals timed with some sort of geopolitical event such as sanctions on Russia or the electric grid in South Africa disrupting production, those are the kind of commodities I think more likely that aren't quite as liquid as WTI and silver we talked about.
Patrick, thank you so much for the update. Patrick Armstrong there, Chief Investment Officer at Plurimi Wealth. Now, coming up a little bit later in the program, we'll step forward. The European Commission President, Ursula von der Leyen, announces extra doses from AstraZeneca.
Morning, everybody. I'm going to place an order to buy euro. So all of you guys who are looking to buy euro, this is your chance. The order will be 120.98. Okay, so I'm placing the order and let's see. 120.98. Okay, let's wait and see. Okay, hopefully we will get right now the order. Okay, great news. Position opened on euro against United States dollar at 1.2098. So if you placed an order, it's supposed to be executed and you're on. So you got order filled.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Ryanair expects to lose up to 950 million euros in the year through March. A resurgence of coronavirus cases has led governments to impose new restrictions on travel. Europe's biggest discount airline says passenger numbers for the year will now be under 30 million. It previously expected up to 35 million. Nintendo is raising its outlook for Switch sales again after strong holiday sales and now expects to sell 26.5 million units of the console, up from 24 million. The company is also boosting its forecast for operating profit up 24%. That's on the back of a surge in sales brought on by the pandemic, including a new Animal Crossing game. Online retailer ASOS is buying Topshop, one of Britain's best-known clothing brands. Philip Green's insolvent retail empire, Arcadia, is selling the labels, including Miss Selfridge, for £295 million. It follows rival Boohoo last week buying Debenhams for £55 million. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. The focus firmly on silver. I know we have a number of reporters, including our great Eddie van der Veld, of course, manning also the Bloomberg Markets live blog, looking at exactly what's underneath what we've seen. Now, we do have a number of stories, and of course, everyone, happy Monday as well. Now, the global stocks are still rallying. Look, if you look at silver, it's jumping to its 2013 high. It crossed $30 an ounce for the first time in a Reddit-fueled frenzy. Again, it's a different story, though, to what we saw with GameStop, so I would be quite cautious in all of the narrative around it. If you look at Asian equities, they gained on manufacturing, but also on that easing China cash squeeze. Now, coming up, Myanmar faces a new political crisis as the military seizes power and detains de facto leader Aung San Suu Kyi. We'll bring you the very latest on that next. This is Bloomberg. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get the latest on the situation in Myanmar. The country's military has detained de facto leader Aung San Suu Kyi and declared a state of emergency. Now, the army's chief says the action is in response to alleged voter fraud and that the military will hold a free and fair general election after the emergency is over. While Suu Kyi has urged the country's 55 million people to oppose the coup. Now, for more on all of this, we're joined by Bloomberg's Philip Heijmans. Philip, thank you so much for joining us. I mean, I don't know if it escalated pretty quickly, but what exactly led to the latest developments?
Yeah, well, as you mentioned, after the November elections in which Aung San Suu Kyi and her National League for Democracy had a sweeping landslide victory, military and its affiliates had kind of refused to back down on allegations of mass fraud that included millions and millions of votes. You know, we've been hearing reports that there were negotiations heading into this week at the beginning of a parliament for the sitting of the new parliament, rather, and that those negotiations had apparently just broken down.
So what's been the international reaction and what could the military actually do next?
Well, yeah, international reaction has been pretty steady throughout the day. We've seen earlier that the U.S. had responded in what will turn out to be Joe Biden's first international foreign policy push or test of his presidency. They have asked the military to reverse its course. So has the United Nations and Australia and even some ASEAN partners. At the same time, China was quite vague on its reply, while Thailand, which is known to have coups of its own, just said simply that it's Myanmar's own affairs to deal with. In terms of what might be done next, you mentioned the prospect of elections. It's unclear at this point whether the NLD will be allowed to participate in those elections. But for the time being, the military is installing its own president. Even more interesting, perhaps, though, is that you have Aung San Suu Kyi, who, in a letter posted on her Facebook, urged the country's 55 million people to oppose military action, calling it an attempt to bring the nation back under military dictatorship. So we're waiting to see how that situation evolves on the ground.
Thank you so much. Bloomberg's Philip Heijmans there from our Southeast Asia government joining us today. Now let's get to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK supply of vaccines is secure and the country's rollout is on track. That's according to International Trade Secretary Liz Truss. The EU's new rules require vaccine producers to get authorization before sending jabs outside the bloc. But Truss says the government has had assurances that the UK's access won't be disrupted. In a few minutes, we'll speak to the UK's Trade Minister. Now, President Joe Biden meeting with a group of Republican senators to discuss the alternative proposal for an economic relief package. The lawmakers are suggesting a plan worth $600 billion in response to Biden's $1.9 trillion. The Republicans have already rejected the bigger plan, but say they are willing to discuss the path forward. And OPEC Plus has seen almost total compliance for its oil supply cuts in January. The 23-nation alliance aimed to withhold about 7% of global supplies last month in an effort to cut prices. Following a modest increase in production for January, OPEC and its allies have decided to keep output unchanged in February and March. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Francine.
Leanne, thank you so much. Now, Angela Merkel is to hold crisis talks with pharmaceutical executives, regional German leaders, and the Commission officials today. That's as the German Chancellor attempts to speed up the continent's stuttering vaccination drive. AstraZeneca, meanwhile, says it plans to deliver an extra 9 million doses to the EU this quarter, though that's only about half of what Brussels had expected to receive. Now, let's get the latest from Brussels and our Maria today. Maria, I have to say, it's been pretty ugly. I mean, there was even, the invocation of an article implicating Northern Ireland. Where are we now in terms of a EU?
Yes, Francine, and it's a good way to put it because there has been not just a change in tone, but also almost a change in policy. When you look at AstraZeneca right now, they say that they will put on the table an extra 9 million doses. But if you took at the total combined number of vaccines, you're looking at 40 million vaccines coming into the European Union. That is half of what the European Union was expecting. They targeted 80 million. But if you happened over the weekend, and that reference that you mentioned to that clause that was almost triggered on Friday, what could have been a big diplomatic incident in the Irish border, meant that in the space of 48 hours, the European Commission felt that they had to backtrack, that this was creating all kinds of issues and all kinds of tensions. And they now say this offer from AstraZeneca is a good step forward, but nonetheless, it is worth highlighting that this is a 50% cut. It's a number that just a few days ago, the European Commission said was unacceptable. And now on a Sunday, they're happy to run along with it. A lot of this, not so much focus on AstraZeneca and the new offer, but and the ramifications stemming from everything that happened on Friday, where the Commission, to put it mildly, just went from 0 to 100, and some argue that didn't really fully measure the economic and also the political ramifications that this could have.
So, Maria, what do we know about how many extra doses AstraZeneca will actually give the EU? Are they a little bit further advanced in what they need? Vaccines delivered to the EU citizens?
Right. So AstraZeneca says they will do this a week before than they had expected. So they should see that flow coming in pretty quickly, and they'll do another 9 million, which should take you to 40. But the number is clearly not enough. What is interesting today, Francine, is that the head of the European Commission just announced a few minutes ago that Pfizer will come in and they will step up with 75 million doses. So the spin this morning, so to speak, from Brussels is that the AstraZeneca vaccine, that's good. You know, it was a vaccines like Pfizer's vaccine across Europe. So that's the spin that they're trying to put here. Of course, it's been a bad week for the European Union. They've U-turned on a number of occasions. The communications of all of this also has been very badly criticized. And there's a feeling also, Francine, just on a bigger scale from European officials that they do feel this was badly handled by von der Leyen herself. And today there's this anger that they genuinely feel the European Union was a damaged party here, but had to backtrack because of its own mistakes.
Right. But Maria, what's the feeling that was badly handled? I mean, you could argue that actually was badly handled from the start. So the fact that the negotiation wasn't nimble enough, that it was the Commission negotiating on behalf of all the countries, and then actually the spat that really erupted fully last week.
Yes, so this goes back to the regulator perhaps not approving this enough. We know, we've heard already from a number of countries that do say the European Medicines Agency should be doing this much quicker than also going to von der Leyen, who was nowhere to be seen last week. And then on Friday, she came out on the German radio. Yesterday, she was on the German TV. There's this sense that there's a lot of information that is still missing and that really would complete the whole picture. The problem is that we don't hear from the Commissioner herself because the President is nowhere to be seen. And when she does speak, it's very much in the German media. It's almost very targeted at propping up, you could argue, to the CDU. There's the German election happening also at the end of the month, and or the end of the year, and that's where her focus has been. There's also another issue about the distribution at a national level, the distribution at a European level, and just not buying enough vaccines and not spending enough. There's also been criticism on that front that the European Commission should not be looking on contracts on the basis of price, but it should have secured everything that it could have possibly done, because this is the one thing that is going to flip the economy from a recession into a healthy recovery.
Thank you so much, Maria Tadeo, there in Brussels with the very latest on the vaccine debacle. Now, coming up exactly 1 month after leaving the EU single market, the UK is applying to join a trading bloc of 11 Pacific nations. Well, we'll be speaking to the United Kingdom's trade minister next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne McGarren. Hi, Leanne.
Hi, Francine. Ryanair expects to lose up to 950 million euros in the year through March. A resurgence of coronavirus cases had led governments to impose new restrictions on travel. Europe's biggest discount airline says passenger numbers for the year will now be under 30 million. It previously expected up to 35 million. Nintendo is raising its outlook for Switch sales again after strong holiday sales. It now expects to sell 26.5 million units of the console, up from 24. The company is also boosting its forecast for operating profit, up 24%. That's on the back of a surge in sales brought on by the pandemic, including a new Animal Crossing game. And big oil nearly got even bigger. According to Dow Jones, the CEOs of Exxon and Chevron spoke last year about combining the two largest U.S. oil companies. It said the talks were preliminary and aren't ongoing. Combining the two would be the biggest deal the energy industry has ever seen and create an energy giant with more revenue than Saudi Aramco. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, exactly 1 month since the UK fully left the European Union, the world's biggest single market. Today sees it formally apply to join the 11-nation CPTPP trading bloc, which is centered around the Pacific and includes Japan, Vietnam, and Australia. Well, negotiations with the group, which accounts for about 13% of global GDP, are expected to start later this year. Well, joining us now is Ranil Jawardena. He is the UK International Trade Minister. Minister, thank you so much for joining us today on Bloomberg Surveillance. If the UK gets accepted in the group, how much will that actually benefit the UK in terms of trade?
Well, great to be with you, Francine. And this is a key strategic move for the United Kingdom because CPTPP has members with a GDP worth £9 trillion. And so together they account for 13% of the world's entire household spending. This is part of our journey to be at the heart of a global trading network, and we can take advantage of these benefits without giving up any control over our laws, our borders, or our money, unlike when we were in the EU.
But does it give us, have we done a full impact assessment? Do we know exactly who will benefit and where and how quickly?
Well, we know that we already have £111 billion worth of trade with these countries each year, and this deal will help give British businesses direct access to some of these fastest growing markets in the world. And these are countries that are going to be key players in the global economy in the decades to come. So we could never have done this as part of the EU. And we believe that this will be good for British business and be part of Britain's journey to be upholding the rules-based trading system around the world.
Minister, can you give me an exact sense of what sectors will benefit the most from this membership?
Absolutely. So being part of CPTPP will break down barriers to trade in areas like food and drink and car exports and digital. And in future years, I think it will open up all kinds of opportunities for world-leading tech and services sectors as a result of those digital benefits. It will allow data to flow freely between members and remove unnecessary barriers for businesses, and will really help protect commercial source code and encryption. So this is good news for both the goods and services exports from Britain, and really places Britain at the heart of this trading network. This is good news for British businesses.
Why exactly do you think that this membership is more valuable than the EU, which is around the corner and also the biggest trading bloc for the UK?
Well, unlike the EU, joining doesn't require Britain to cede control over our laws, our borders, or our money. And I've already articulated the trading levels and the trading growth that we have with these countries, about 8% a year since 2016. But it will bring benefits that simply weren't possible as part of the EU. Modern digital trade rules that allow data to flow freely between members, including Japan, Malaysia, Vietnam, Australia, New Zealand. These are major players. They are growing economies, and it will also help eliminate tariffs quicker on British exports, including whiskey, for example, down from 165% to naught in Malaysia, and cars where we'll be able to reduce tariffs to naught quicker in Canada than we would otherwise have been able to do through our bilateral trade agreement. But there's more, of course, because the rules of origin that allow content from any country within CPTPP to count as originating really will help car manufacturers and others, including using Japanese car parts, for example.
Minister, when you look at what happened in the last 4 to 5 days and the huge spat over vaccines and the way that the Commission and the Commission President has dealt with it, is it the final thing that actually unites, Remainers and Brexiteers, that it was a good move in leaving the EU?
Well, we, of course, want to have a very friendly relationship with our European counterparts, and we have secured a groundbreaking trade deal with the EU, which is unprecedented. And so that's really good news. Clearly, there have been some difficulties in the recent days, but I believe we are past that now, and we can continue to work together for the good of all. And ultimately, this coronavirus, this COVID-19, is a global challenge. So it is right that we all work together and we don't put up protectionist barriers. That will only get in the way of not only the economic recovery from COVID, but also the battle to defeat it itself.
Minister, how should the UK deal with what's going on in Myanmar?
Well, clearly, it is very concerning to see what's going on in Burma, and we stand very clearly in favour of democracy and upholding that freedom for people to choose their own government. So we are monitoring this very, very carefully, and we believe that democracy should be resumed.
Meaning that the UK could do what next as a step?
Well, we will be monitoring this very closely. The Prime Minister has, of course, tweeted about this already. The Foreign Secretary has already made a statement as well. I'm not going to speculate on what we might or might not do, but we are very clear that our values will be upheld around the world, and Britain will never compromise on those. And that is to say that democracy should prevail.
Thank you so much, Ranil Jayawardena there, the UK International Trade Minister, joining us this morning. Now coming up, the retail frenzy marches on, this time hitting silver ETFs. But is Wall Street or Main Street really profiting off of these moves? We discuss that next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
The price swings are just wild. GameStop, AMC, BlackBerry, and the like. Some very weird and wacky moves in some of these stocks. It's really a casino atmosphere there.
We are worried about the integrity of the marketplace and the clearing systems.
Sounds a lot like market manipulation.
None of this is questionable in my mind.
And probably needs to be regulated.
What we don't need is for Congress to come in and save everybody.
The system is, from a financial stability perspective, still is robust.
This is going to end badly.
Everyone's talking about rational or irrational exuberance.
Over the long run, rationality is going to beat irrationality.
It's not something that necessarily threatens to bring down the market.
It's probably going to end in tears for a lot of these retail investors and hedge funds.
Rational or irrational? That's a Shakespeare question. I'm sure he'll write a play soon on GameStop. But some of our guests are on Bloomberg TV weighing in on the feud between retail investors and hedge fund titans over GameStop's share price. Now, GameStop ending the last week with a 400% rally as brokerages clamped down on trades that burned short sellers and hedge funds. But at the same time, institutions have been profiting off the historic rally and heavy shorted names targeted by Reddit users. Well, joining us for the very latest on this is our Danny Berger. Danny, I mean, this story is frankly amazing. The narrative we've heard is that retail traders winning over Wall Street. It's not as straightforward, though, is it?
It's really not. It's more nuanced, and that's because a lot of the people who've been making really the big numbers, the most money off of this, are indeed institutionals. They're the typical people you think of when you think of Wall Street. Now, one of them are market makers, so they make their money on the bid-ask spread when these shares trade. Citadel Securities comes to mind as someone who's big in this industry, of course, separate from Citadel, the hedge fund. But if you look at GameStop alone, last week, the average daily volume was $20 billion. The bid-ask spreads were also wider than usual, meaning for the entirety of the week, the trading revenue brought in was nearly $500 million. And this is just for GameStop alone and just for their cash trading alone. This doesn't include derivatives. So we're in this weird world where, in trying to stick it to Citadel, the hedge fund, you actually brought in a lot of money for Citadel Securities. Again, the two of them are separate but not unrelated. It wasn't just market makers, though. It was other smart money that decided to cash in on the rally. For example, we had AMC give a big profit to Silver Lake. They had convertible bonds. They decided to exercise them, selling 44 million shares, which means they got $113 million worth of profit. These are just a few examples, but it really does show it's not just retail making the money. A lot of the money was made by other hedge funds and other classic Wall Street institutions.
Danny, what does this mean for the average mom and pop investor that doesn't hold GameStop?
Well, that's probably the majority of retail investors when you think about it, but they did not do well last week, and that's because some of the effects on the overall market. Now, those effects were one where we saw hedge funds selling in to the market. As Goldman Sachs put it, this week demonstrated that an unsustainable excess in certain stocks can cause a contagion effect. We saw hedge funds unwinding the most since 2009, according to Goldman Sachs Prime Brokerage Services. And you can see why they did that. There's a huge spread here between the hedge fund winners and their most shorted stocks. That means overall the market bled $3.7 trillion. And that overall market is what most mom and pop investors are exposed to. They're holding passive index tracking funds, be it in their 401k, be another pension scheme. So this is where they feel the pain. The average investor was not holding millions of shares worth of GameStop. They saw their fortunes fall with the overall market, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest on a pretty incredible weekend. Looking forward to what we see this week. In the meantime, it's all about silver. Now, I would like to caution everyone just on silver. I know we've been going backwards and forwards in the newsroom about what exactly silver is. It just seems like a very different play to what we saw with GameStop. First of all, because of how money managers, for example, are positioned on silver. Global stocks, though, are up. Of course, concern over volatile trading has receded. China also taking steps to ease a cash crunch. If you look at silver, it's crossed $30 an ounce. And then a couple of other things I'm watching out for. Pound, for example, rising on expectations that the UK will confirm all residents at eligible care homes have been offered a vaccine. We'll have plenty more shortly with Tom Keene. This is Bloomberg.
Okay guys, new order on the way. If you're looking to sell short British pound, this is your chance. I'm placing an order to sell short at 137.345. Order placed to sell short at 137.345. Let's wait and see how long it will take us to get this order filled. You copy in this trade, so don't forget to place an order.
Silver spikes. Retail investors swarm into their biggest target yet, sending the precious metal above $30 an ounce. AstraZeneca ups vaccine deliveries to the EU as the bloc tries to give its rollout a boost. Angela Merkel holds crisis talks with pharma executives. And President Biden will meet with Republican senators proposing a $600 billion stimulus plan as the debate over the size of the relief package continues. Well, good morning, everyone. Happy Monday and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, I know we'll spend a good amount of time today talking about silver. Now, a word of caution, I was actually very uneasy about linking it exactly to what's happening with GameStop for a couple of reasons. First of all, it doesn't show up in the Reddit posts as much as GameStop did 5-6 days ago. And the other thing is that it's a very different scenario, especially with money managers being net long on silver. It's different market. It's not as contained as GameStop.
Yeah, it's a very, very different market. I'll go with that. But we do have a nice pop out to $30 the ounce. That's a big number, folks, getting it back to where it was. I'm going to say 2012. GameStop with a lift here in very early trading. Don't want to say too much on that, 346. What I'm more interested in, Francine, is yes, less the tick by tick of whatever's shorting at the moment, but much more the market, the clearinghouse, and the regulatory response. I'm way more interested in how JP Morgan adapts to all this than I am to the given price moves that we're seeing.
I think you're right, Tom, but you also need to try and understand whether it could ever touch WTI. I mean, there's huge market repercussions, but you're right, not less day today, and actually more of the bigger picture in regulation, and whether it could also happen in Europe. The rules, Tom, on short selling are very different for retail investors. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, as you were just saying, silver has taken center stage in the retail investor frenzy. They sent the metal to a 5-month high today, and that's fueling a debate over the power of Reddit-inspired speculators to take on ever bigger targets. A weekend buying binge overwhelmed online sellers of silver coins and bars from the US to Australia. President Biden meets today with 10 Republican senators who have an alternative plan for coronavirus relief. They're calling for $600 billion in spending, less than a third of what the president was asking for. And in Myanmar, a big setback for the country's transition to democracy. The military has detained Aung San Suu Kyi, voided her party's election victory, and declared a state of emergency for a year. Myanmar's army chief says he took the action in response to voter fraud. He says the military will hold a free and fair election after the emergency is over. And AstraZeneca will deliver 9 million additional doses of coronavirus vaccine to the European Union in the first quarter. The EU is trying to get its chaotic inoculation drive on track. The extra doses will give in a total of 40 million. That's still only about half of what the EU had expected AstraZeneca to come up with. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Let me do a regular data check here to get Monday started, less away from the short of the moment. Futures up 34, Dow futures up 200 points, just over the 30,000 level. The VIX does what it's supposed to do. It comes in nicely. 31.51 is a really good statistic in 1.58 VIX points as well. In the yield space, I got a mixed story, but all in all, yields set a little bit higher here. ISM coming up at 10 o'clock will be an important tone setter for this jobs week, the first week of February. Where did January go? Dollar stronger. Sterling, I'll let Francine explain. Sterling, it's a short squeeze on sterling, I say.
Yeah, so the pound, Tom, is rising on expectations that the UK will confirm all residents at eligible care homes have been offered a vaccine. And it just seems, the story has definitely changed from the number of deaths to how quickly the UK is now being able to administer these vaccine doses, and the fact that actually we seem to have plentiful as well. Global stocks overall climbing. As you say, Tom, look, we're less concerned about the volatile retail trading and also China taking steps to ease a cash crunch. Silver crossed $30. So sticking with silver, retail investors fueling the momentum behind the metal. Amid debate, Reddit-inspired speculators are looking to take on bigger bets. Well, joining us now is Bloomberg editor-at-large Marty Schenker. Marty, thank you for waking up early for us on a Monday morning. The concern I have is that you can link it because you have a lot of retail investors, but it's just a different market, Marty. When you look at the scope the scope for short squeeze, frankly, is far less obvious than in some of the GameStop and other stocks we were looking at last week.
Yeah, it's very perplexing and sort of reflects the whole chaotic atmosphere under which these retail investors are operating. Many of them unsophisticated and novices, basically, and who don't truly understand the nature of the markets in which they're investing.
So how does it change? Does it change regulation, Marty? If you look at the fairness of it, you could argue there's been also hedge funds doing these kind of shorts in the past that are not, as fair. So give the retailers the chance to do the same.
Well, this is sort of the basic conflict, isn't it? This notion that it's the little guys versus the institutional players. But in terms of regulation, the regulations are designed to perhaps give more access and democratizing the markets, but regulation moves extraordinarily slowly in Washington, and even if the SEC were to decide to do something about this, it will take not days, but weeks, months, and as far as legislation goes, it could take even years.
Marty, good morning to you. Good Monday morning, and I hope that trade you had on GameStop last week worked out for you.
Yeah.
Marty, the heart of the matter here, we've got lots of different people giving us perspective. Joe Weisenthal, we're thrilled we'll get up early. Joe usually, Francine, Joe usually only gets up like 10 a.m. or something. It's very cool.
And actually, he starts tweeting at like 4 a.m.
Marty, to me, the heart of the matter here is Robinhood is Robinhood, but they're not the CMX, the COMEX. I mean, with silver, you're playing around with very, very experienced, entrenched entities, aren't you?
You are indeed, and one of them, including Citadel, which is reported to be one of the top holders of the contracts that underlie silver's price, and there are very different mechanics to the silver ETF than there are for basically GameStop and other securities. And the end of the line, the taking possession of the physical commodity may be in store as well. So it's a very different market. The institutions are net long, meaning they hold, they're not shorting the metal. And so how this all ends, it does is likely to be badly for the retail investors.
Yeah, well, it's likely to be badly for them, and then there's a point where shorts turn. They always do as well. Did we see in our reporting, and folks, by the way, I thought Bloomberg's reporting over the weekend was really smart. Is there any indication of people walking away from the short squeeze? I don't see it.
We don't see any indication of that so far, and like everyone else, we're sort of watching the numbers and just making determinations based on the price movements.
Marty, how are hedge funds dealing with what happened last week? Does every major hedge fund now have an algorithm tracking Reddit?
I don't know if everyone does, but if they don't, they may have to get one pretty quickly. It's the hedge funds. This is obviously an unprecedented market phenomenon. They were caught unawares by the short squeeze in GameStop and others. They took significant losses. And, the point is we're having discussions about this on the air this morning, and no one really knows where this is going or where it's going to end.
I was going to ask you, where does this end? Is there a worry? And this is, again, market, not even chatters, people saying, what happens if they start going after oil?
Yeah, I mean, everybody is, a lot of people, a lot of market experts saying this is really just a tiny portion of the asset markets around the world, all the different asset classes. This is just a minuscule amount of money. But, stranger things have happened in the marketplace where unintended consequences can roil into different asset classes. So it's not clear where this is going to end.
Marty, I guess to start the week off here, it is about the cash call and that headline that came out over the weekend of a negative 53% return for a hedge fund. Do you just assume there's other hedge funds out there that will enjoy that drawdown?
Well, there's no question that there are other hedge funds that are suffering some distress. We have not picked up any specific names, but it just stands to reason that anybody who had short bets, and many of them did because that's the way you hedge your long bets, are suffering some losses and maybe some significant ones.
All right, Marty, thank you so much. Bloomberg editor-at-large there, Marty Schenker, joining us this morning. Now, coming up next, we speak with Jane Foley, Rabobank head of FX strategy. We'll also ask the question whether anything like this could ever happen in the currency markets. This is Bloomberg.
price swings are just wild. GameStop, AMC, BlackBerry, and the like.
Some very weird and wacky moves in some of these stocks.
It's really a casino atmosphere there.
We are worried about the integrity of the marketplace and the clearing systems.
Sounds a lot like market manipulation.
None of this is questionable in my mind.
And probably needs to be regulated.
What we don't need is for Congress to come in and save everybody.
The system is, from a financial stability perspective, still is robust.
This is going to end badly.
Everyone's talking about rational or irrational exuberance.
Over the long run, rationality is going to beat irrationality.
It's not something that necessarily threatens to bring down the market.
It's probably going to end in tears for a lot of these retail investors and hedge funds.
Some Bloomberg guests there are weighing in on the feud between retail investors and hedge fund titans. Now, joining us is Jane Foley, Rabobank head of FX strategy. Jane, we have a couple of levels that we want to discuss shortly, including pound. But first of all, when you look at what happened with GameStop and now possibly touching silver, could anything like this ever happen for a currency?
I would say it's pretty impossible, certainly in the big currency pairs like euro dollar. I mean, we've got to look at the daily turnover for the foreign exchange market. I think it is now around about 6.6 trillion every single day. Now, of course, a lot of that is in the big dollar crosses. It's euro dollar, and then to a lesser extent, dollar yen and cable. And I think it's very unlikely you could get retail investors really making themselves known in currency pair like that. Now, whether or not that's the same case in some of the smaller emerging markets, or perhaps even the New Zealand dollar or the NOK, well, it's unlikely, but perhaps a little bit more probable. But the daily turnover of FX is so big that this would be a completely different market for the retail investor.
Yeah, it kind of harkens back to when George Soros broke the Bank of England many decades ago. Jane, I mean, is there any way of actually tracking some of the movements? Does everybody, including head of FX strategy, need to now track what's happening with retail investors?
I think it's really interesting. Now, I think we've got to sort of put this in the perspective as to why perhaps this is more interesting like now, this year, this month, than it was previously. And I think there's a couple of things here. And first is, the huge savings ratio that we've seen in developed countries because of the coronavirus, because of, payments, because people can't go out and spend money. We've seen the saving ratio is really quite strong. We've seen a lot of people perhaps furloughed or underemployed as well. So people have time on their hands. And now, of course, we have access to technology for the retail investor that just wasn't there 20 years ago, and that's just continued to improve really since the global financial crisis. So there's a number of reasons why we're seeing this now. Now, whether or not we're going to see the same sort of trends perhaps in a year's time when people are off furlough, when the savings ratios are down, when people can spend their money in more normal sort of means, it remains to be seen. But I do think from here on in, perhaps the retail investor is going to be more of a force to be reckoned with than perhaps it was before. I think what we've seen is an acceleration of a trend that was already building.
Jane Foley, one of the great distinctions here, and I went back and looked at the Hunt brothers 1980 over the weekend like a lot of other people did, is where interest rates are. That dovetails right into your foreign exchange strategy as well. Could this happen without a low real rate, without low nominal rates? Could this happen in a normal non-central bank adjusted rate market?
I think it's probably less likely. I mean, yes, it could happen because people have the technology, they've got the platforms, the access is easier. And of course, one thing I didn't mention is that we've got this enormous savings glut as well. So people are, got this money to save. They're looking at putting it in perhaps what we might call traditionally normal means, which would have been relatively conservative, relatively safe investments or bonds, for instance. And they're thinking, oh my goodness, there isn't any yield here. How else can I actually get some yield? Now, of course, in recent years, people have watched the stock markets and seen the stock markets do very little really, but keep on going higher. We keep on seeing reports of record highs. And this is a function, of course, of what central banks are doing, leaning on the yield curves, keeping interest rates low. Yeah. And so this is all part, I think, of fueling what we've seen in recent weeks.
With the coup in Myanmar, I'd ask you about the Myanmar cut, but it's really not plated much. Let's go to something a little more fungible, the Chinese renminbi. What is your readjustment, your call now with new renminbi, new yuan strength?
Well, we've seen a little bit of a disappointment in the Chinese data yesterday, but generally speaking, I think the market is of the view that we've got an economy, the only major economy really to have expanded last year, and there's been so much interest in pushing into Chinese bonds, for instance. We've seen a bit more liberalization of that market, and if we look at the flow, what we've seen is, yes, a big win for emerging markets, but China in particular is seeing flows perhaps from investors that wouldn't have considered China just a few years ago. So from that point of view, I think we are going to see more strength of the renminbi this year, and perhaps we do need to see some rebalancing of other major economies in terms of growth before we see that trend really slow down.
Jane, we went here in the UK from, the government can't do anything, look at how many deaths there are, it's been a shambles, to actually they're being able to vaccinate enough people quickly enough, and they're also reaching some of course, the eligible care home residents. What does that mean for trajectory for pound?
Well, I need to cancel order to sell short British pound. As you can see, it moved too far, quite substantially, so we'll have to wait for better time. So at this moment, please, all of you guys, cancel the order, because momentum changed and the direction of this price changed as well. We have to wait for better and clear picture what's going to happen with this pair.
Is hit more by social distancing, etc., than other sectors, and there is this view out there that because it fell so hard, it can rebound hard as well, particularly with the vaccine program. So the bulls are flexing their muscles. I think it's going to be a rocky road for them, though. I think we've got a couple of quarters at least of quite some disappointing data before we do see growth, and then of course we've got scarring in the economy to contend with as well. So it could be a rocky road, but certainly there's a number of sterling bulls out there right now.
So I'm hearing you range bound. What I'm hearing here, Jane, really, we've staggered 1 month through. It's basically a continuation of what we observed last year. And what I'm hearing is a Jane Foley range bound. Is that correct?
I think it's 2 steps forward, 1 step back. I think it's going to be choppy, but within a range. I'd say the same sort of thing, really, for euro dollar too. I think we can correct back, but I think we can go a little bit higher as well. So a choppy, but within much more tighter ranges, I suspect, than we've seen last year or so.
Jane Foley, thank you so much. Greatly, greatly appreciate it this morning. Jane Foley with Rabobank getting us started here, linking, as we're going to have to do today, linking everything in with the gyrations in the market. GameStop churning 345. Silver takes an ebb off the 30 level, 29.69. He is truly our greatest thinker on systems analysis, on systems linkages. Michael Spence is the laureate with General Atlantic as a senior advisor. Coming up, Michael Spence on the systems analysis, the stumbles of moving from vaccinations to vaccines. This is Bloomberg. Good morning.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
In case you missed it, here's what's trending right now. George Clooney has been
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. The CEOs of ExxonMobil and Chevron reportedly discussed a possible merger last year. According to the Dow Jones, the two largest U.S. oil companies spoke as the coronavirus was hurting oil and gas demand. The talks were described as a primary and are not ongoing. A merger would require an okay from antitrust authorities around the world. Exxon and Chevron have declined to comment. Ryanair says it expects to lose up to $1.1 billion in the year through March. A resurgence of coronavirus cases in Europe has led governments to impose new restrictions on travel. The continent's biggest discount airline said it's still hopeful for a partial recovery in demand, depending on the rate of vaccinations. And the search for a new CEO for Ferrari isn't being limited to the auto industry. Headhunters have started to assemble a list of luxury brand heavyweights that include the CEO of Gucci. Ferrari chairman John Elkann said may shed some light on the search tomorrow. That's when he'll unveil Ferrari's full-year results. And that is the Bloomberg Business Flash. Tom?
Ritika, thanks so much. Early trading here, GameStop with a bid, 340, 350, silver to 30, and then rolling over here at 29 level right now. Futures on the general market bid nicely, up 32. Dow futures up 192. Yields higher. I'm going to call it modestly correlated to a better risk-on feel. Euro yen 126.79 gets my attention. All in all, stronger euro, weaker yen in the last number of days. Francine?
Yeah, a couple of things, Tom. When you look at China taking steps to ease a cash crunch, that's giving a little bit of a lift to stocks. Silver, you're right, crossing $30 and now back at 29 point something. The pound also rising on expectations that the UK will confirm all residents at eligible care homes have been offered a vaccine, so they seem to be doing much better than expected in terms of the rollout, but also in terms of the number of doses they have access to. So we're looking at silver, we're looking at, VIX really not doing much today, and then we look at, in general, hedge funds, how they deal with this ever volatility. Now, coming up, Hussein Kanji, Hoxton Ventures partner. We'll talk about GameStop. We'll talk about algorithms, tracking some of the chatter on Reddit as well. This is Bloomberg.
就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 扫，就手机扫码，然后微信和这支付宝扫我们这个车上的这个二维码，大家就会进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg First Word News. A group of 10 Republican senators will present their coronavirus stimulus plan to President Biden today. Republicans have mostly rejected the president's $1.9 trillion proposal, and the plan being laid out today calls for spending less than a third of that. Still, the president has said he hopes two sides could negotiate a bipartisan deal. Former President Trump has named 2 trial lawyers to represent him at his upcoming impeachment trial. The president parted ways with his previous defense team over the weekend. According to CNN, those lawyers left after Trump wanted them to argue that the election had been stolen from him by massive fraud. Iran warns the U.S. it can't return to the nuclear deal with just a single signature. The foreign ministry says first the U.S. must reverse a series of key sanctions and allow the transfer of oil revenue. Both the U.S. and Iran are calling on each other to take the first step to restore the international agreement. And in Russia, more than 4,000 people were arrested in a second straight week of anti-Putin protests. Amongst those detained, the wife of jailed opposition leader Alexei Navalny. A Russian court is preparing to hand Navalny a possible 3.5-year prison term. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. Futures up 33. The VIX comes in nicely, 31.47. What we're trying to do, particularly on a Monday and particularly adapting and adjusting off of what we saw last week, is bring you voices of experience on the different themes, the different parts of this great investment debate on a short squeeze. Hussein Kanji is with Hoxton Ventures Partners, a lot of experience at Microsoft, a lot of experience with being in rooms where people pitch ideas and people pitch deals. Hussein, thank you so much for joining. A lot of chit-chat over the weekend on the future of Robinhood. Doug Cass of Seabreeze, among many others, talking about how Robinhood would consolidate into stronger hands. Is that just a given?
I don't know about I think it has aims to be an independent kind of owned company, and I think it's going down the path of an IPO at some point. I don't think it's going to be part of someone else's kind of wider portfolio as much as it can help it. It certainly had a cash squeeze because of everything that happened last week, but I think it was able to raise the money in pretty short order.
Tell me the thinking of the people that gave them a reported, I believe, just under $1 billion. They pony up. Is it to protect their interest? Is it to take a greater equity interest where it's opportunistic for them? What's that emotion?
Oh, I mean, it was their financial backers to begin with. Sequoia Capital was one of them. I think these are funders who want to see it become, have Robinhood become a large, valuable entity in and of itself. It had a cash squeeze just because of, exchange listing rules where you have to put up collateral, and so it needed the money in very short order. The fact that it was able to do that, literally within 24 hours, is a sign that people have a lot of faith that this thing become its own big company.
Hussein, what will Robinhood become in 3 years?
I think it wants to be the kind of big brokerage for the millennial population. So I think it it has its eyes on being the next generation Fidelity for the up and coming investors.
I mean, are there any mistakes this week that could actually give way to another platform, or do they have first mover advantage that just won't go away?
No, I think they have first mover advantage, but the disappointing thing about Robinhood over the last week is their communication strategy was, I think, very lackluster. When everything was happening, they didn't really control the narrative in a single bit. There were lots of these accusations as to what was actually going on. There was a thread on Reddit, saying that there are people kind of behind the scenes manipulating Robinhood, and they're kind of going against everything. I think the CEO did a pretty bad job in terms of owning the message as an independent leader. But most of this stuff was, quite frankly, out of Robinhood's hands because people are buying long dated kind of call options on things, and they had to go off and fulfill kind of collateral requirements.
Well, let's pick up on these delicate statements that you make. The observation that the gentleman from the hood did a pretty bad job of messaging. Are his principles setting Robinhood up for a management change to go IPO, or are they setting it up for a management change to find the greatest bidder to be the millennials broker?
It's a good question. I don't think there's implied in the question is there going to be a management change? I don't think there's going to be a management change, but I think you're seeing once again the immaturity of a young tech company and the leadership in the young tech company kind of be able to take responsibility and be able to own its own narrative. You see this time and time again with Facebook as kind of the poster child, and yet again you're finding a company that's kind of thrust into the limelight that's more powerful than it ever probably intended to be, and it's on the back foot. You would imagine these companies should be able to grow up a lot faster.
Hussein, it's Monday. It's non-editorializing Monday, so I'm going to step very carefully here. Francine's over in London laughing at me. Hussein Kanji, with the delicate statements again that you're making, what is the Monday morning task of the backers of Robinhood and the sharks circling who would love to take out that franchise?
Oh, I mean, I think the Monday morning quarterbacking here is does the company have the resources that it does, and how do you prevent, if there's another run like this, how do you prevent the company from being in the crosshairs? And there's probably a lot of pressure on Vlad, the CEO and the founder, to kind of take a leadership position and kind of own the narrative. You already, by the way, saw it on Twitter. One of the executives from Robinhood, or former executives from Robinhood, who's the VP of product, kind of put up a large Twitter stream, saying, like, I wish the company kind of owned the messaging a little bit better and got ahead of the story instead of always reacting from a press and comms perspective.
Hussein, I'm trying to introduce Tom to Clubhouse. What will Clubhouse become? Is it really the new Twitter? This is a kind of, you drop in, Elon Musk used it earlier or late last night, Pacific time, earlier this morning if you're based in Europe and New York. Can it really take over the narrative?
Yeah, I mean, what I'm surprised by is how much of the story is being told on these channels like Clubhouse, and how open people are. So you're right. I woke up this morning to the news that Elon kind of joined Clubhouse and then had a conversation with the CEO of Robinhood on it. It's a very closed network because you need an invitation to get onto Clubhouse, but it's a surprisingly open and transparent conversation, and it's not that hard to be able to get a token to kind of, or an invitation to be able to get onto the platform. So you're finding it's almost like a next generation Quora where it's the insiders having a very transparent conversation with each other.
Saying, do I look Clubhouse ready? I mean,
absolutely.
Francine, take a look. Am I Clubhouse ready, folks?
Tom, I just sent you an invitation. You are so Clubhouse ready.
Have a scotch and a cigar and have fun. Clubhouse, are you kidding me, Francine?
Do you know what Clubhouse? So actually, Hussein, I mean, Clubhouse is basically you drop into what? How do you describe it? It's almost like some kind of podcast, a live podcast, and you listen into the conversation.
I'm doing that with my 13-year-old right now.
Yeah, it's like dropping into a radio station, except you get the chance to speak, right? So it's almost like a talk show in some respects, but everyone has a bit of a voice, and all the people around the table are largely insiders in the industry. So they're not having a superficial conversation about something. They could be something. It could be something quite poignant, and you get to listen in if you're in the club.
If you're in the
Tom
club.
is so in the club.
I'm so.
Hussein. Tom's so in the club. Hussein, thank you. Hussein Kanji, their partner at Hoxton Ventures. Now, coming up next, we speak with Philip Drury, Citigroup head of EMEA Banking and Capital Markets. We'll talk, of course, about M&A and the way forward.
Yeah.
This is Bloomberg.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Now, Tom, a record $63 billion for January IPOs. Well, the deal surge comes as soaring markets trigger bubble fears. Now, special purpose acquisition companies, or SPACs, are also the driver behind the busiest start to a year for offerings. Well, joining us now is Philip Drury. He's Citigroup head of EMEA Banking and Capital Markets. Philip, thank you so much for joining us. Is there a worry that actually there's so many companies that are scrambling to IPO just because valuations are insane, and 2 years from now it all comes crashing down?
Well, look, thanks for having me on this morning, Francine and Tom. It's certainly true that activity levels are very, very busy out of the gates in January. You mentioned overall IPO volumes, 25 billion of SPAC proceeds raised just in January, and that compares to 80 billion having been raised throughout the course of 2020. So we're certainly seeing unprecedented levels of volume, but we're also seeing a lot of demand. And in this low interest rate environment, we're continuing to see a rotation of funds into equities. And we believe that underpins the levels of volume and activity that we're seeing right now. As always, IPO windows do open and close. Equities right now are forecasting a significant recovery in the second half of the year. So the windows can certainly close. And if we do see challenges to this recovery as it relates to the vaccine deployment in the second half of the year, then we'll certainly see a slowdown in activity. But for now, offerings are getting very well oversubscribed and the aftermarkets are robust.
What are the fast-growing digital plays that make sense at these sort of levels, Philip?
Well, we've certainly seen significant activity from e-commerce. If we look at the IPOs that we've had in the market recently, we priced InPost last week. That was a very successful offering from Poland. We're in the market this week with Moonpig from the UK, also Auto One, which is a German European secondary car business. So certainly internet-generated growth that has seen a catalyst to business models through this period of COVID. But broad technology, content, software, that's really where we've seen the drivers of activity in recent weeks and months.
Phil, I know that you have a record 14 days in a row of rubber chicken on the old IPO circuit. You hold that, you got a trophy from Corbat for that. It's gone. Today, we have a new transparency, a different transparency. Are we getting the correct information on these investments, and particularly on the SPACs without the rubber chicken lunch?
Look, I think we've become a lot more efficient as it relates to investor education and marketing. And this period of COVID and the ability to use Zoom, I think will have long-lasting effects when we come through COVID. So the ability to engage investors and educate investors, the ability to be time efficient for our CEOs and CFOs has certainly improved, and we've become a lot more productive. Also, the information dissemination, it's still getting out there, but it's getting out there in different means. So whether that be testing the waters in the US or investor education and cornerstone investing in EMEA, it then allows for a more accelerated marketing in the public domain. But we believe the necessary education is being conveyed and the level of engagement with investors to make for sound investment decisions.
Do you see over the next 24 to even 5 years out, 60 months, a continuing EMA switch, or I should say shift, from fixed income and debt instruments to equity?
I think under change in administrations, we've got change of views as it relates to interest rates. So we're going to still be operating in a low interest rate environment, but maybe with a level of pickup under the new US administration, more so than we would have done with the prior administration. But there's no doubt in this low interest rate environment, there's a search for a pickup in yield and a rotation into equities. Certainly that's the case for the short to medium term. Whether that's the case for the long term and 5 years out, Tom, remains to be seen.
Phil Drury, thank you so much. Never enough time. Really, really informative. He is the Citigroup head of EMA Banking and Capital Markets. Futures up 32, down futures up 180. The VIX comes in a very nice correlated way with yield higher, well, fractionally higher. I can't sell that too well right now. Gold up $12, 1862 an ounce. Yes, we're watching silver buttressed up against 30. We're watching GameStop. Francine's got 7 other names her kids are in as well. We'll continue to watch that story on this Monday. ISM out at 10 a.m. Wall Street time. Mona Mahejan, Allianz Global Investors in the 7 o'clock hour. Stay with us. This is Bloomberg.
it to be an action that was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. The world's richest person again rocked the Bitcoin market. Elon Musk sent prices spiking after saying, quote, Bitcoin is a good thing on the social media app Clubhouse. He wrote that he should have bought the cryptocurrency 8 years ago. On Friday, Bitcoin jumped as much as 16% after Musk changed his Twitter profile to #Bitcoin. The semiconductor industry rebounded last year. According to a trade organization, sales rose 6.5%. That was fueled by demand for technology to support work and school from home. China was the largest consumer of computer chips. Meanwhile, sales in the Americas soared 20%. And Nintendo has raised its annual forecast for a second time. Continued momentum for the Switch gaming console helped the company to its best quarterly earnings since 2008. Nintendo now expects to sell 26.5 million of the devices this fiscal year. Sales remain strong even after the holidays. And that is your Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, silver taking center stage in the retail investor frenzy sweeping through markets. Our Eddie van der Veld from the Bloomberg Markets Live team joins us. Eddie, can we really say that it's a retail investor frenzy? It feels very different. How difficult is it to link, silver to what happened with GameStop?
Yeah, I mean, look, we've had a significant move in silver, right? At one point today, we were up 11%. We're up the most, headed for the biggest gain since 2008. So these are significant moves. But it pales in comparison to what we saw in GameStop, which was up 1,000% or more, right? So it's a much more muted move, and I think part of the problem is that the retail investors are taking on a much bigger market. They're taking on a much more liquid market. They're taking on a commodity, and they're taking on a market that is not net short. So that makes it very hard to squeeze this market. I think they've still got a lot to prove. We've seen some net buying flowing into this market, but I think that's what's pushing up the price. We're not seeing a second-order effect yet.
Right, and I guess the market for silver is also so vast and so different to stocks.
Absolutely. I think it's a very different game. I think, look, it's absolutely possible to squeeze a commodity market. It's absolutely possible to squeeze the silver market, but you would have to get demand to a level where you're triggering a short squeeze, but where you are triggering a physical squeeze. And the problem with the silver market is that silver has been oversupplied for approaching a decade, ever since the photographic industry collapsed. So really what we are waiting for, or I think they would have been better off targeting something like the palladium market, which is tight anyway. But silver attracts the conspiracy theories, and that's why, sorry, carry on.
No, Edward, I don't mean to interrupt in any way. We're thrilled to have you on, and it's not on Bitcoin. That's even better, 34,000 down 500 points. Eddie, look, it's simple, and you nail it. You just move on to the next thing. When does this end? I mean, if anybody with a belief that there's a short view and they're going to go against it, whatever the technology, you just bounce from thing to thing to thing, don't you?
And that's the problem, partially for the Reddit crowd, is that they had a unified voice around one stock. But as they attract more people there, because the subreddit group is growing exponentially,
right?
And you will get more disparate voices in there, and I think people will start to split the vote in a sense, and start to split where the money is going. I do think they're better focusing on the single stocks and the ones that are heavily shorted, which is an avenue that they have proven. But I think that the silver rally that we're seeing, I mean, by midweek, I'd be surprised if it's still moving at that point.
Okay, you're going to go out to midweek. That's what I was going to go for, a timeline here of what your reading of history is. I know, the tulips, you were using Bitcoin back in the tulip thing a few centuries ago. But Eddie, your timeline is a matter of days on this event?
I really do think so, because I think the target for the Reddit investors has been the ETFs. They were saying, okay, what we can do is we're going to buy so much silver ETFs that we're going to prove that there's not enough metal in the London vaults to supply them. The problem with that theory is that the ETFs don't have to fulfill their mandate by the end of the day. I think silver, the iShares one says something like we aim to get no more than X amount of unallocated metal, 1,100 ounces of unallocated metal. But the problem is, by Wednesday, once you've got the trucks and the silver supply line can very quickly ramp up and get metal from other sources to London, and there are big stocks of metal out in the physical market.
But Eddie, at the same time, money managers have this net long position on the metal since mid-2019. So does that not counter, the narrative that we heard last week that this is against Wall Street?
Yeah, it does. It does. So here's the thing. So we're talking about the managed money position. The managed money position is net long. The bullion banks, have a net short position in New York, right? And that is visible, and that is what attracts the speculation around there being this naked short against the silver futures. But the problem is that those same bullion banks have a net long position in London because they're sitting on physical stocks in London. So it's two halves of one trade, one of which is visible, the short side is visible, and people are extrapolating from the visible end that there is a naked short bet against the metal, and there just isn't.
Eddie, thank you so much. Edward van der Alt with us, and of course we got to follow him with a Nobel laureate. We'll get to that in a moment. Eddie, thank you so much on silver and on Bitcoin as well. The laureate is Michael Spence of Stanford and of NYU, the Nobel laureate of General Atlantic senior advisor, I should say. This is a really, really, really important conversation on the systems analysis, the process, the logistics of moving forward from a vaccine to the societal vaccination. Michael Spence next. Futures advance up 29. This is Bloomberg.
Podcast, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This morning onward, the squeezers of shorts, they find a silver lining in silver, but silver is not GameStop. Pro tip, the street is generally long. How do you go long against people already long? Let's make a deal. How odd. President Biden will meet with the GOP 10. Biden spoke to Collins of Maine. Senator Collins spoke to the president. Jared Bernstein says, quote, cease any delay, any inaction. And the pandemic partition, COVID, 1 year on. Good morning, everyone. Bloomberg surveillance on a Monday. Busy week, jobs week in America. ISM today will begin to take a look at the January American economy, but all that pushed aside by the pandemic, vaccination, news in Europe. And Francine, you and I, we are read in. We know a short squeeze when we see it.
Well, we're read in, although there seems to be more and more chatter saying, look, what we're seeing in silver is definitely maybe spurred on by retail investors, but maybe the bulk of it is not on Reddit. So, Tom, there are a number of dynamics, and I really love the way you wrote the open. Look, you know, this dynamic is very different to what we saw with GameStop because you have big institutional investors actually long, net long on silver, and the market is also much more scattered. So we'll have plenty more on silver, and then a couple of other things. Pound on the rise. It's to do with vaccinations and that ugly, ugly spat between the EU and AstraZeneca. Frankly, I was shocked over the weekend.
Yeah, well, that's there as well. But for our global Wall Street audience, we're really going to focus here on the ramifications of these events. You saw one hedge fund down 50-some% over the weekend and on and on. GameStop right now, 338. I'm looking for an entry point. I almost pulled the trigger at 500, Francine, and I said no.
You've lost, Tom. Move on.
Yeah, well, I did move on to silver at 30. I had a buy limit order in at 31. That didn't go off, so we'll see where that goes. Right now, doing it correctly. Our first word news on a Monday. Here's Ritika Gupta.
Thanks, Tom. As you were saying, silver taking center stage in the retail investor frenzy. They sent the metal to a 5-month high today, and that's fueling a debate over the power of Reddit-inspired speculators to take on ever bigger targets. A weekend buying binge overwhelmed online sellers of silver coins and bars from the US to Australia. And President Biden meets today with 10 Republican senators who have an alternative plan for coronavirus relief. They're calling for $600 billion in spending, less than a third of what the president wants. And it's an opportunity for both sides to begin talks on a bipartisan deal. At the same time, though, Democrats could pursue the Biden proposal without Republican support. In Myanmar, a big setback for the country's transition to democracy. The military has detained Aung San Suu Kyi, avoided her party's election victory, and declared a state of emergency for a year. Myanmar's army chief says he took the action in response to voter fraud. He says the military will hold a free and fair election after the emergency is over. And AstraZeneca will deliver 9 million additional doses of coronavirus vaccine to the European Union in the first quarter. The EU is trying to get its chaotic inoculation drive on track. The extra doses will give it a total of 40 million. That's still only about half of what the EU had expected AstraZeneca to come up with. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Riska Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Let me do a straight data check here without GameStop and silver as well. Maybe I'll get silver in. Futures up 29, a nice lift. Dow up 163. VIX comes in one big figure, 1.48, 31.61 on the VIX. It's it was correlated. Now it's less so. Flat in the 10-year yield, 1.07. Some dollar strength. I really want to note that. 90.85 on DXY gives me a dollar strength indication. Francine, sterling, I'll let you explain.
Yeah, so there's a little bit of movement on sterling, Tom, on the back of, these vaccines being administered maybe more quickly than expected, certainly more quickly than the European Union and the U.S. A little bit of a lift to pound. That's now being tempered, but overall global stocks are climbing. Concern over this volatile retail trade is receding, and China also taking steps to ease a cash crunch. So overall, we're just watching silver, Tom. Silver futures surging as much as 12%. And I know we want to talk about that a lot more going forward.
Well, we will. Right now, to look at some of the political debate we've seen over the weekend, Elizabeth Warren is a senator from the Commonwealth. Jared Bernstein, who has been a huge supporter of the show over the years, was an advisor to Vice President Biden and is now advisor to President Biden. Let's listen.
The president's main concern there is that the regulator in charge, the SEC, Security and Exchange Commission, has to make sure not that there's no volatility and speculation in the market, that's a constant, but that the underlying plumbing of the financial markets remains sound.
It's not about protecting people from making bad trades. It's about keeping the playing field level. You can't do that in the middle of a trading cycle.
Two voices on a political view forward right now, and we thank you for joining us here. I am thrilled to bring in a gentleman that changed business journalism. Joe Weisenthal is too modest to mention it, but the headlines were boring, dumb, and stupid until Weisenthal showed up at Business Insider a few years ago and truly changed how we read business journalism. Single-handedly did that, and of course with Bloomberg for an epic range now, co-anchor of What'd You Miss, and we're thrilled Joe Weisenthal could brief us this morning. What'd you learn over the weekend? Tell me what you learned, Joe, over the weekend.
People are having a lot of fun with this idea that you can download an app on your phone, sign up for a trading account in a few minutes, and really drive everyone crazy, whether it's getting everyone obsessed with the idea that maybe you could have a short squeeze in silver, whether it's causing a hedge fund to lose 50% of its value in the span of a month, whether it's just us having to figure out what it's all about. That is an irresistible narrative for people to continue to be part of it, to try to take it bigger and bigger.
What is the feeling you have about the leadership of Robinhood? To me, the nexus here is where the adults say, okay, this has all been great. And Joe, let's be honest, you helped invent some of this. It's all been great. Silicon Valley, younger people, blah, blah, blah. What do the adults want out of this 5 days and 5 months from now?
I mean, I think you're exactly right. I mean, this is a West Coast.
I'm placing a new order to buy euro at 120.77.5. Would have placed 177.5. Just right here. Okay.
Advertising the stock market or whatever you want, but when it comes time for there to be sort of real capital rules and the DTCC imposes greater requirements and you have to learn how to communicate this idea of, well, how do you talk about your own liquidity and balance sheet position without freaking out your investors? Suddenly a lot of that sort of West Coast idealism doesn't work out as well, and it gets a little bit tougher. And I think that's sort of the moment that we experienced over the last few days.
But Joe, you have rules that actually allowed hedge funds to do similar things over the past. So why are retail investors being treated differently, or why could they be treated differently?
Well, I think there's a perception that they're being treated differently. I mean, I think the perception is that retail investors are being limited because they're participating in a short squeeze. And so people say, oh, well, like, you know, short squeezes have always existed in the past, and hedge funds have opportunistically taken advantage of that all the time. And I don't think, although that's the narrative, I don't think it's really the right case. I think what's going on is, the way to think about it is, the Robinhood and other brokers, bankers, so to speak, are looking at them and saying, well, your clients are taking on extraordinary risk.
New position opened on euro at 120.77.5. So if you're following my trades, you should, and if you copy them, you should open position right here. So you got two positions, right? First one, 120.98, and second one, 120.77.5. Okay, two long positions.
Joe, can we go back to silver? I mean, the scope of actually, you know, short squeezing silver is it just seems different to GameStop.
Yeah, I mean, absolutely. I mean, first of all, it's not clear that anyone really is short silver en masse. I mean, there's this urban legend that's been going around for as long as I've been following finance. People have this like fantasy that like the bankers and JP Morgan are all part of this conspiracy for unknown reasons to suppress the price of silver, which has never really been clear to me why JP Morgan would care about keeping silver prices down. But it's like this urban legend. It's been on the internet forever. And so people think they're engaging in some revolutionary act by buying silver. Instead, they're just buying silver. I mean, no one really like cares that much.
Out on the internet, as I said at the beginning of the conversation, Joe Weisenthal, you helped invent this. Is it your fault? Is it the stalwarts' fault? I mean, the technology here, the Twitterness of it, you know, what you and Henry developed. And folks, I want to make clear, Business Insider was totally different when the pace of it, than it was, you know, it was like this. You have to read it. I have to read it. I don't read Joe Weisenthal. Are you kidding me? And everybody did. Is it your guys' fault?
It's all our fault. I think, you know, there is this phenomenon where it's sort of like trading and markets that get memified 0 to 60 very fast. A week ago or a week and a half ago, no one ever heard of GameStop. Now it's a international phenomenon. I was looking on Instagram last night, memes in every different language about this trade.
So take it back to Warren and Jared Bernstein. Then what's the to-do capitalism, but protects ourselves from the excesses of the stalwart?
You know, I think the key thing is to make sure that the regulated institutions involved in this trade, facilitating this trade, are well capitalized. In the end, like, you can't stop people too much from doing what they want with their own money. There's no such thing as sound financial markets without speculation. We have extremes in both directions. What you want to make sure is that the various entities handling these trades are not going to blow up. And so what looks like changing the rules in the middle of the game, what looks like you know, a not fair playing field, might just be sort of sound capital management.
Joe Weisenthal, thank you so much. Of course, what'd you miss? Why are you up this early?
Who wants to miss all this action?
Always.
You know,
you gotta check it out.
He's rocking in at 10 a.m. usually. Coming up next, the laureate from NYU and Stanford, Michael Spence, will join us. This is a really important interview on the processes of getting from vaccine to vaccination. Weisenthal lifts the market. Futures up 32. Stay with us. This is Bloomberg.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The price swings are just wild.
GameStop, AMC, BlackBerry, and the like.
Some very weird and wacky moves in some of these stocks. It's really a casino atmosphere there.
We are worried about the integrity of the marketplace and the clearing systems.
Sounds a lot like market manipulation.
None of this is questionable in my mind.
And probably needs to be regulated.
What we don't need is for Congress to come in and save everybody.
The system is, from a financial stability perspective, still is robust.
This is going to end badly.
Everyone's talking about rational or irrational exuberance.
Over the long run, rationality is going to beat irrationality.
It's not something that necessarily threatens to bring down the market.
It's probably going to end in tears for a lot of these retail investors and hedge funds.
Voices on what we observe right now. We are absolutely thrilled right now to have with us Michael Spence, the Nobel laureate, General Atlantic Senior Advisor, Knight Professor Emeritus at GSB Stanford. Professor Spence, I want to talk about the pandemic here in a bit, but we've got to talk about the moment. And I want to go back to 1948, where a guy named Samuelson published a textbook, and walking in the door at MIT was a really interesting Columbia PhD named Kindleberger. Tell us what is in classic Kindleberger, a gentleman that you heard lecture, that we need to know this morning.
Well, Kindleberger was a very insightful economist. He, understood international economics very well, but he's famous for shedding light on essentially crises, and so. We've lived through a lot of them now, but I'm not sure what to say about Kindleberger, but he was a genius.
Well, he was a genius, and he taught, I have real trouble right now with the word mania talking about this short selling because it seems very, very rational. Are you looking at these as rational processes, or is it truly using Kindleberger a mania?
Right, Tom, I mean, I'm no expert at these things, and you have a lot of experts on the TV, but I think it's both, right? I mean, I think you can make a pretty good case that the market, prior to this recent round of volatility, was being driven by essentially people having to stay in the market, even though a growing fraction of them know it's overvalued, and getting out of bounds. And now you have social media interacting with a bunch of retail investors. We've seen some of this before. We saw it in the internet bubble when the market movements were being driven by retail investors. So they're back in, only now they're sort of able to organize themselves by talking to each other on social media. So we're going to watch this play out. But I think we've got sort of mania and valuation problems all at the same time.
Michael Spence, good morning. How do you think this
will end? Good morning, Francine. Sorry, Francine, say again.
How do you think this will end? I mean, we're watching the possible regulation. We're watching the next target, if there is one. Are we underestimating the impact this will have on the wider market longer term?
I don't think so, Francine. I mean, I don't mean to be excessively sanguine. So I think looking out for possible pockets of systemic risk is a good thing, and that's indeed what you and your guests are doing. But right at the moment, I see, retail investors may get hurt, a bunch of short sellers may get hurt, but I haven't seen anything that suggests that, the whole thing will be unstable. Now, and the other point I think is worth making is that the combination of digital technology and finance is moving so fast that I think it's fair to say that not just in the U.S. but everywhere, the regulations are trying to catch up. You saw it in China with the Ant Financial thing and episode and so on. So, I think we're going to see a kind of regulatory catch-up phenomenon after with the benefit of this experience, however it turns out.
I think, Michael Spence, that in Europe, retail investors can't actually, trade on some of the call options, or the rules are different in Europe than they are in the U.S. Do we need a more harmonized regulation across the board?
I think we probably do. I mean, I'm not sure what the impediments are, for U.S. retail investors, but generally the international financial markets are open. So you can get end runs and arbitrage. And I think it would, I don't know how to estimate the probability that we'll get to this on a pretty fulsome international agenda that's been underattended to. But I think, on balance, some reasonable degree of harmonization is a good goal.
Michael Spence, you have studied tax policy over the decades. Is there an efficacy to a financial transactions tax, or is it essentially a nuisance and a moral advantage, if you will?
I'm not dead set against a financial transactions tax, and I suppose it's supposed to tone down high frequency trading and any potential instability that might go with that kind of thing. But to be perfectly honest, it's not the center of risk. One of the things that worries me a whole lot more than that is that if we go into an extended period of low interest rates, not just governments, but the private sector is going to lever up. And at some point, we're going to have a stability problem. So if we've got limited regulatory bandwidth, the financial transactions tax and whatever it might accomplish wouldn't be at the top of my list.
Well, this is really important, folks, and certainly a careful study of the silver crisis, if you will, of the early 1980s was a little bit different interest rate regime under Volcker than what we see now. We'll continue with Professor Spence here. He has a very important essay on the path from vaccine to vaccination, and that will be truly must-watch. Futures up 35, Dow futures up 218, a very nice lift to the market, waiting for the VIX to click in a little bit early in the morning right now for that. Coming up, Torsten Slack of Apollo Management, their chief economist. Stay with us. Jobs Day on Friday. This is Bloomberg. Good morning.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. The CEOs of ExxonMobil and Chevron reportedly discussed a possible merger last year. According to the Dow Jones, the two largest U.S. oil companies spoke as the coronavirus was hurting oil and gas demand. The talks were described as a primary and are not ongoing. A merger would require an okay from antitrust authorities around the world. Exxon and Chevron have declined to comment. And Ryanair says it expects to lose up to $1.1 billion in the year through March. A resurgence of coronavirus cases in Europe has led governments to impose new restrictions on travel. The continent's biggest discount airline said it's still hopeful for a partial recovery in demand, depending on the rates of vaccinations. And we just want to correct a story that ran earlier. The OPEC Plus coalition estimated it implemented 99% of the agreed oil supply curbs in December. We accidentally said January. And that is your latest Bloomberg Business Flash. Francie.
Ritika, thank you so much. Now, a lot of the focus is, of course, on silver. We had a great briefing by our Joe Weisenthal, and to look at what futures are doing at the moment for silver. So silver still passing $30. Again, retail traders getting in on the bet, although there are now questions about you can really, draw the parallels to what happened with GameStop. Overall, global stocks climbing. Concern over this volatile retail trading seems to be receding, and China also taking steps to ease a cash crunch. Tom.
Francine, thanks so much. Again, futures up 39, Dow futures up 238. Very nice lift to this market. Some dollar strength, watching that very carefully. And silver, I'm going to call it a slight bid here. Coming up, not the David Axelrod of the White House, David Axelrod of the Securities and Exchange Commission, their former trial counsel. This is Bloomberg. Good morning.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Bloomberg Surveillance. Good morning, everyone. Tom Keene and Francine Lacroix with us, the laureate Michael Spence. Right now, Spence, writing in Project Syndicate in a clear English what we're all feeling, but he sorts it out so well. The president's vaccine challenge. Implementing it depends on rapid vaccine deployment. The U.S. is at war against COVID-19, but the existing systems, both public and private, for delivering what is needed to win are weak, fragmented, and especially uncoordinated. Different prioritization schemes undermine perceptions of fairness and lead to a disorderly scramble. Michael Spence with a really, really important essay there. All of his work is brilliant, but every once in a while he just drops something of resounding clarity. Michael Spence, is modern fairness killing us?
Well, no. I think people's sense of fairness is not killing us. What's killing us is that the in multiple dimensions, that the growth patterns and social, economic and social dynamics, including in the pandemic, have been unfair. So, but people have a very, I think, important and useful sense of fairness. So one of the things that worried me in the pandemic is that, unequal access, vaccine tourism, all the kinds of things you could expect to see when you have a sort of disorganized and chaotic and decentralized process.
It's a decentralized process. We have to get it centralized. Which institution does that?
Federal government. I was careful not to be critical of the Biden administration because they walked into this with, a chaotic situation and nothing like the kind of planning that went into the operations in the UK, which seem to be going better. You're bound to have shortages. I use the term wartime economy carefully. I was born in World War II, and one thing takes priority in a wartime economy, and that is making sure the military effort is properly supported by the economy. And in order to do that, you basically create an organization centrally that shuts everything else aside. And that creates shortages, and markets don't clear, and prices might spike, so you have price controls and all kinds of things. And I'm not saying this will be exactly like this, but the central government should have a complete information database. We should have central, we should have had, I should say. By the way, Tom and Francine, I don't want to say that the right strategy for the Biden administration is to start over again. We're into this, we've got to operate with the pieces that are functioning at the state level and so on, but still kind of transparency, taking some degree of control over it, removing obstacles that are removable in the manufacturing and the logistics and so on is I think, what they're going to try to do.
Michael Spence, how do you view what's happening in Europe? So you have this massive spat between AstraZeneca and the Commission and the EU. does it really show the limitation of the European Union? The bloc feels like it could have negotiated better as a whole, but actually there are huge vaccine shortages compared to the UK because they were late.
Yeah, I think they were late to the game. I think that conversation between the EU and the discussion about whether the different countries, I'd still prefer the EU, provided they're representing the interests of the member countries well. But that conversation with the the developers, the innovators of the vaccine, I think started way too late. So they didn't seem to have a realistic estimate of the ability to ramp up the supply of the vaccine, and there were questions about whether it was going to the United States or to Europe or whatever. I mean, all of these things are things that they might have been contentious discussions, Francine, but it looks like they didn't take place.
Right. So what happens, Michael, given that you have different speeds of, different countries getting vaccinated? We mentioned the US, Europe, and the UK. What kind of economic recovery will we actually see? I mean, in certain cases, it'll take up to 2023 to vaccinate 70% of the population.
Yeah. So, I mean, I think the goal should be to overcome that, so these tensions will decline, when the countries that are out in front, let's call it the UK and the US for the moment, basically get the job done, and then the supply will keep running if it's properly run, if the whole system's properly running, and you can accelerate the delivery of the virus to a much wider range of countries. So even if Europe's behind, I don't think we have to sort of struggle into 2023 to do it. Economic recovery is a different question. In Europe, we're A, in a deeper hole, and B, anticipated growth rates mean that we're probably, at least well into 2022 before we're back where we started.
Professor Spence, thank you so much for joining us today. The Nobel laureate of Stanford and of New York University, and with General Atlantic as a senior advisor. With our news in New York City, our first word news, here's Ritika Gupta.
Thanks, Tom. A group of 10 Republican senators will present their coronavirus stimulus plan to President Biden today. Republicans have mostly rejected the president's $1.9 trillion proposal, and the plan being laid out today calls for spending less than a third of that. Still, the president has said he hopes two sides could negotiate a bipartisan deal. And former President Trump has named 2 trial lawyers to represent him at his upcoming impeachment trial. The president parted ways with his previous defense team over the weekend. According to CNN, those lawyers left after Trump wanted them to argue that the election had been stolen from him by massive fraud. Iran warns the U.S. it can't return to the nuclear deal with just a single signature. The foreign ministry says first, the U.S. must reverse a series of key sanctions and allow the transfer of oil revenue. Both the U.S. and Iran are calling on each other to take the first step to restore the international agreement. And in Russia, more than 4,000 people were arrested in a second straight week of anti-Putin protests. Amongst those detained, the wife of jailed opposition leader Alexei Navalny. A Russian court is preparing to hand Navalny a possible 3.5-year prison term. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Now, later on today, we speak with Carson Block, Muddy Waters Capital Chief Executive Officer and Chief Investment Officer. He's one of the most famous short sellers, so we'll have a sync, or actually we'll see what he has to say about the week that was. That's at 1:30 p.m. in New York, 6:30 p.m. in London, and this is Bloomberg.
Very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Bloomberg surveillance on a different Monday. Francine Lacroix in London. I'm Tom Keene in New York. There is a significant number of stories, but all on global Wall Street. Indeed, those outside global Wall Street fixated on the events of, well, a short squeeze. They go back to biblical times. Someone expert on biblical times and his experiences then, Barry Ritholtz, joins us with Bloomberg Opinion and, of course, his work with money management. Barry, what'd you learn from your clients over the weekend? Your phone must have been burning up. What'd you learn?
Surprisingly, my phone wasn't burning up. We're very proactive about educating clients as to what matters and what's noisy distraction. And maybe this is a bit of an outlier view, but I look at GameStop as a minor, fascinating, but irrelevant, made-for-TV storyline. It's not systemic. It's not part of a broader trend. This is a short squeezes and message board. This is everything old is new again. This is iOmega on the Yahoo message boards from the mid-90s.
Barry, you're showing your age. 99.285% of the audience doesn't know iOmega from Omega and Alpha. Barry, very importantly then, what do the adults do about GameStop? What do the adults do about Robinhood if that was where this started? Remember, commissions are free, Barry.
Yeah, well, free is what the price is, but it's not what the cost is, as we learned last week. You know, if you're a newbie trader and you're jumping in with both feet, I hate to tell you this, but you have to educate yourself pretty rapidly. I think a lot of the Robinhood traders didn't realize that they're the product. They're not the client. The client of Robinhood are firms like Citadel, market makers, and people who pay for order flow. When you get something for free, you're what's being sold. The parallel is radio. Radio doesn't sell ads. Radio sells audience to advertisers. Robinhood isn't selling brokerage services. They're selling that order flow to big market makers. And I think people were very much blindsided when they discovered that Robinhood is subject to the same regulations as every other brokerage firm. Hey, you have $1 billion in outstanding risk, says the various regulators. You better raise some capital. And that's why they froze the purchase of GameStop and took $1 billion line of credit from JP Morgan and Goldman Sachs.
But Barry, sorry, going back to, you don't see anything in what happened really last week. Could this be replicated in specific instances? And is it what we're seeing with silver, or is it a totally different story?
Hey, maybe silver is the next new thing. Silver was up, what, almost 50% last year. It had a really decent year. Here's the one thing that we always have to remember, that everything is survivorship bias. We see GameStop as a giant winner driven by Reddit and TikTok and all these other things. Reddit, Wall Street Bets on Reddit has been around for a decade. So how much stuff did they throw at the wall before suddenly one thing caught fire? The old expression on the trading desks was, hey, even a blind squirrel occasionally finds a nut. These guys got exceedingly lucky. They identified, first of all, great rule of trading, never short single-digit stocks. If you're short at $5 and it's barely $1 billion, you're asking for trouble. Take that combined with the fact that it was a wildly overshorted position. I think some traders were expecting this to go to zero, and you have the perfect kindling, and along comes Wall Street Bets and lights it on fire. I don't know if they have that ability to do that so readily again and again. You know, they got incredibly lucky. The CEO of Chewy comes in, and then Michael Burry comes in. It was the perfect storm. Let's see if they can repeat this. This may have just been a one-off outlier.
Barry, let's do a little bit of instructional here. One of the folks, the only way you learn to short is to enjoy losing money at shorting. It's an acquired habit and taste. Barry, the thing I learned in shorting is you got to have a good short idea in a sector going down, in a market going down. That radically increases your probability of success. Tell us about shorting in a bull market.
It's really, really hard. In the 2000s, my firm had put out negative research on, and you'll remember this, Tom, AIG and Bear Stearns and Lehman and CIT and the banking sector in general. And it was pretty clear in 05 and 06 and 07 that this was a disaster. But you had to be painfully going the wrong way while the market ran up in your face before eventually, the markets aren't perfectly efficient. They're kind of, sort of, eventually efficient. And eventually people figured out that, you know, I'm fond of saying the financial crisis didn't make Lehman Brothers insolvent. It revealed that Lehman Brothers was insolvent. And you could be on the wrong side of a trade for years and years and years before a catalyst comes along. In this case, it was David Einhorn.